should be good. But, you know, we'll see. We'll see, you know, several years from now. I don't think my guess is the administration isn't worried day to day on market reaction. But where are we a year from now? Where are we heading into the midterms? What does the economy look like? What's the equity market doing? Maybe people are just too focused on the short-term dynamics.
A lot of big questions to be answered. That's why we'd love to keep talking with you, Joe, and we appreciate the time as always. Joe Livornia with us live on Bloomberg TV and radio as we watch on YouTube as well. The opening trades of CoreWeave in a market that was already struggling today. And we want to turn to Charlie Pellet with his view on the markets at World Headquarters in New York. Charlie, what do you have?
Well, right now we are lower across the board. The Dow, the S&P, NASDAQ just about at the worst level of the day. Do not want to ignore CoreWeave against the backdrop of the market selling. Right now we have got CoreWeave after trading just a couple of minutes ago, down now by about 0.3%. Quote I'm looking at right now, 39.69 on CoreWeave. We'll keep you updated throughout the day here on Bloomberg Television and Radio. The markets lower across the board with the S&P right now down 1.9%. The S&P at 55.84, drop there of just about 110 points. The Dow down 703, down 1.7%. The NASDAQ Composite Index down 2.6%. 459 points lower on the NASDAQ Composite. The 10-year 4.25% with the 2-year 3.90%. Gold at a record 3,083 up 0.9%. West Texas Intermediate crude down 0.8%, 69.38. Cannot ignore the move in Bitcoin today to the downside, down 4% right now. Bitcoin 83,866. So again, recapping here, the Dow, the S&P, NASDAQ all lower. CoreWeave opens lower, down 1.5% right now. To keep it all in context, the S&P down by 1.9%. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, always keeping it in context for us. Thank you so much. CoreWeave right now trading at just over $39 a share. That is below the IPO price of $40. And of course, that IPO, where ultimately that initial public offering came in, was well below what was the initial range, which went as high as $57 per share. This was a downsized IPO, only raised $1.5 billion. As we've pointed out, NVIDIA was a big chunk of that. It, of course, is both a customer and a backer of CoreWeave. It bought up $250 million in shares, according to Bloomberg's reporting. And it raises a question, Joe, of is this about just wider sentiment, this being a rough market to make a public debut in today, or is this actually sending a signal about artificial intelligence, which, as we were just discussing with Joe Livornia, has been a really hot trade with a lot baked into it already. And the question is, was too much baked in?
Yeah, that's the question for Bailey Lipschultz, who joins us now from New York, as we keep the beat on this. This is Balance of Power, but we're focused on an IPO that's happening before our eyes. Bloomberg News senior equities reporter. Bailey, the big picture here, this is clearly an IPO that did not go the way CoreWeave had planned. Is this an AI story? Is this a tech story? Or is this a stock market story today?
It's a little bit of everything. This is a company, if we go back a month and a half ago, was talking about raising up to $4 billion in an IPO. A week ago, they launched, as Kaylee mentioned, to price up to $2.7 billion. What has fundamentally changed with the business when I'm talking to investors and bankers from today versus last week when the deal was launched? Is not much. Yes, NVIDIA is down pretty sharply, and the NASDAQ 100 is down more than 2.5%. But when you talk to people that are in the room or talking to people who are talking to people in the room, there's a lot of misunderstanding around what went wrong with the pricing of this. Obviously, if you talk to investors, this is the starting point of a company. But when you're down more than 2% below your IPO price, where people paid just a few hours ago, that causes more consternation, and that kind of plays into this kind of debate.
Well, especially when where you are now is $39 a share, and I'll correct myself. The initial high end of the range was $55 from the initial plan. 47 to 55 was that range. Bailey, when we consider how this is an indicator more widely, though beyond CoreWeave, considering NVIDIA, for example, which is a big backer, but also a big customer, what signal could this send about other players that the market is heavily relying on? Speaking of NVIDIA here.
Well, it goes back to the debate or conversations that we've been seeing around how long some of this spend will last. When you look at an area that we've seen Cowen analysts calling out Microsoft pulling back some of their spending. That sounds a bit of an alarm. When you look at Alibaba, Chairman Joe Tsai warning of a potential bubble forming in data center construction, that sounds an alarm, especially related to a company that really makes its money by helping rent out and lease these GPUs. So when you look at a company that, again, NVIDIA bought a big chunk of the IPO, about 17%. When you look at a company that is a big customer, according to D.A. Davidson, could be buying 6 to 7% of NVIDIA's products for 2024, it's a very tight-knit circle. And in a market that everyone's looking for a reason to sell stocks, that's why you're seeing a number of these companies under pressure. And that's why when we talk to people on the buy side, it's not a shock to see this deal go how it's been going.
You know, NVIDIA is also trading back near its recent lows as well. How much of this blows back on the big company involved here, CoreWeave's partner?
I think it's to not overplay it. When you look at the reporting we have about NVIDIA buying about $250 million, that's a rounding error for the company, all things considered. But to your point, it's down 7%, almost 7% this week. And when you look at where it was trading really around the election, you're down more than 25%. So there's broader jitters around what this can mean. And again, with a market that has been so heavily predicated on excitement around Donald Trump's return to the White House and what that could mean, as well as this AI excitement, if this deal was priced in November or December, I think we're having a very different conversation than in the wake of DeepSeek back in January and in the wake of some of these reports, again, from Cowen or commentary from the likes of a Joe Tsai.
All right, Bailey Lipschultz, Bloomberg senior equities reporter, thank you so much. As CoreWeave, again, is trading below its IPO price, just over $39 a share right now, trading into, obviously, what is a wider sell-off day. The NASDAQ 100 down 2.6%. We want to add the voice now of Katie Roof, who covers venture capital for us here at Bloomberg. And Katie, when we think about an initial public offering finally getting the exit, obviously this is probably not the way that anyone wanted this to go. Does this send a signal more widely about the hopes for a revival in capital markets activity, not just M&A, but also things like initial public offerings that everybody was anticipating could happen under the Trump administration? The environment's looking a little bit rougher now.
I can tell you there's about 1,000 unicorns in Silicon Valley that are looking at this and worried about it because there's so much pent-up demand for IPOs on the sell side, and they have not been finding the right time for several years now to IPO. I mean, there's only been a handful of tech IPOs in the last few years, and I know about 7 venture-backed companies that were looking maybe to IPO in Q2, and, you know, some of them might go out anyways just because they're getting desperate, but that's usually not the timing that is a good time to go public. And so I think that they're looking at this and they're probably a bit nervous because, you know, as you've noted, it opened lower than it priced lower than the range, they reduced the size of the IPO. All of these are negative, very negative signals about demand, although it's also could just be specific partly to the company that maybe the bankers overestimated demand for this particular company, and so we'll have to see on some of the others.
You know, another stock I'm looking at today, Katie, is Goldman Sachs. It's down $20, almost 4%. Having talked about animal spirits going into this administration, there are big questions about what it means for M&A for the rest of the year and what it means for new issues for the rest of the year. If this keeps going in the direction that it is going, where are we for IPOs in the second half of 2025?
So IPOs just don't like volatility. And so I think the key thing to watch right now on the markets is just, are they stable? And then for tech IPOs in particular, you've got to look at the tech multiples and, you know, how tech stocks broadly are trading. And that will, you know, signify whether there's an appetite for new listings. But yeah, you know, I think last year the window was a little more open than people thought. The ones that went last year, most of them did okay. But so many tech companies were waiting because they thought that a Trump administration would be better for the markets, and they thought that they were going to time it perfectly. And now it's looking like, you know, for various reasons that some of these IPOs haven't gone as well as planned.
Well, it's great to have you with us in the clutch here. Many thanks to Katie Roof at World Headquarters in New York as we watch the early trades of CoreWeave, Kaylee, not exactly what the company had hoped for or planned for, that we seem to be stabilizing here around this level as we kind of hover above $38 a share.
Yep, keeping in mind that that is below the IPO price by more than 4% now, of $40 a share on what is a wider down day for equity markets. The S&P right now down 2%, the NASDAQ 100 down 2.7%. And of course, by and large, that does seem to be over concerns around the economic data, which we have seen both hard and soft today coming in, showing signs perhaps of a softening consumer, or at least a consumer not feeling like they want to spend as much, and persistent inflationary pressures in the face of what could be even higher tariffs effective next week. President Trump, speaking in the Oval Office just a moment ago, reiterated that April 2nd, next Wednesday, is going to be Liberation Day. He was also asked if Americans should go out and buy cars now. He said no. We'll continue, of course, to keep track of the tariff story for you, but that's not the only effort this administration currently has underway, Joe, as he's also still actively pursuing a downsizing of the federal government.
Yeah, you can't just blame the losses, the concerns on Wall Street on one thing. It's tariffs, it's economic data, it's the steep cuts coming from DOGE and the great uncertainty over how they all collide in this massive reconciliation bill that's being crafted in Washington. We got a little bit of insight, although also more curiosity in an Elon Musk interview. He showed up on Fox News with the actual DOGE bros who sat behind him, those who are working in the Department of Government Efficiency, and made a lofty pledge for cuts in the coming weeks. Listen.
Our goal is to reduce the deficit by $1 trillion. So every day that passes, our goal is to reduce the waste and fraud by $4 billion a day, every day, 7 days a week. And so far, we are succeeding. When we do make mistakes, we correct them quickly, and we move on. America is going to be in much better shape. America will be solvent. The critical programs that people depend upon will work, and it's going to be a fantastic future.
It's going to be a fantastic future, says Elon Musk, as we assemble our signature panel. Here on the Friday edition of Balance of Power, Jeannie Shanzano is with us, Democratic analyst, senior democracy fellow with the Center for the Study of the Presidency and Congress, and our Republican strategist, Rick Davis, partner at Stone Court Capital. What do you think about this, Rick? The long-term view, it kind of gets back to the no pain, no gain. The long view, according to Elon Musk, is life is going to be fantastic. Do you buy him at his word?
Yeah, look, I mean, this is the spin they got to put on it because life today isn't so fantastic. You know, we talked earlier in the program about how consumers are feeling about the first 60 days of this administration, and it's pretty bad. Lots of news today around the market and the collapse we've seen since the first of the year. So I think this whole administration is going to have to start spinning long term. What is going to happen once these tariffs take effect, once we get past some of these economic resets? You know, Joe Livornia called it the equity markets were having digestion. Yeah, I call it indigestion, right, Joe? I mean, like, this is all stuff that we have to, quote, get past. And so Elon's point is the right point, which is, oh, don't believe your eyes, believe the future. And, you know, once we cut $1 trillion out of federal spending, it'll make the markets happier because, you know, we will show fiscal discipline and start cutting the deficit. So if he can do that, great. If he can do it without massive disruption to people's lives, Social Security holders, you know, people who receive Medicaid, even better. But I don't see any real victories they can point to today. So the long term is the focus.
Well, yeah, that was a lot of ifs from Rick Davis there, Jeannie. If you can pull it off, if you can do it without doing too much damage as you do so. Are you feeling confident that those ifs can be whens ultimately for Elon Musk and co?
I am not incredibly confident at this point. You know, there is a long tradition in the United States government of bringing people in from the private sector. And one of the famous ones is Robert McNamara from Ford, and asking them to, quote unquote, clean up, streamline, make government more efficient. And that's what we saw last night. We saw an attempt to change the narrative because they have not communicated effectively what they're trying to do to the American public. So now they're showing up without T-shirts, without backpacks and suits and ties and no chainsaws amongst them. But I think what they're forgetting is the fact that, remember Chesterton's fence, You don't remove a fence until you know why it's there in the first place. And what we're hearing from Elon Musk is they are going in, they are removing stuff left, right, and center, and then they're going to come back and rehire these people. That's not a good way to make government efficient, effective, and deliver for the people. That's why the polls are showing this isn't effective yet. And we'll see. He says he's going to do this in the next 130 days or so if he can get it done. But I am not holding my breath.
It's even less than that. It would be 130 workdays in total. That is counting weekends and bring Elon Musk to May 29th as a special government employee. Rick, I don't know if he's going to re-sign here, re-up with the U.S. government, maybe get a different job, but do you actually think he can find $1 trillion between now and the end of May simply through waste, fraud, and abuse? That's essentially what he's saying. He told this interview that there would be no cut in critical services, critical programs, if we lopped $1 trillion off of government spending.
Yeah, look, I mean, the pitch was originally $2 trillion. I think they realized that wasn't believable. They went to $1 trillion. They love these big marketing numbers like that. And by the way, they will claim by the end of May that they have cut $1 trillion out of the budget of the federal government, and they'll post things on the webpage of Doge to prove it. Except that hasn't been consistent with what we've seen on Doge's webpage to date. So how they're going to get there, I don't know. It sounds a lot like Congress right now saying, hey, we're going to pay for the Trump tax cuts, with cuts on programs. And one of those is going to be, in Medicaid, except Donald Trump says we're not cutting Medicaid. So it's head snapping. It's hard to follow. One thing I know for absolute certainty, success will be determined by Elon Musk and Donald Trump, not by what actually happens, on the ground in the federal government. And I wouldn't doubt that Elon Musk will go back to, the running his companies, probably looking for him to come back. And yet he will be still the greatest supporter of Donald Trump on the outside than anyone else who's on the team.
Well, now that Rick brought up Congress, Jeannie, there is something else I wanted to ask you about. And we actually just heard President Trump talking about it in brief remarks in the Oval Office, which is that he asked Elise Stefanik, who he had tapped to be ambassador to the United Nations, to not be and instead keep her seat in the House of Representatives due to concerns over a thin majority. The president said he asked Stefanik for a favor. He didn't want to take a chance, he said, on the special election for her seat, which she won by 24 points in New York in November. Jeannie, the idea that the president sees that as a chance, what does that tell you?
I think it tells us that he looked at Tony Fabrizio's poll from the other day, which showed the Democrat in Florida, exactly. I think it says that they now are realizing that they should not have tapped so many members of the House to serve in the administration. It is so awkward for Elise Stefanik. Like, she did a goodbye tour in her district. Her staff left. She's got to rehire all these folks. It is tough, but I never thought it made sense to put her there, given the close margin in the House. The math just doesn't work for Republicans. So it's smart to keep her in the House. They are realizing what we all know is it is going to be very, very tough to get this reconciliation bill passed. And the reality is, the market is going to continue to feel pain if all we see out of Donald Trump's economic policies are tariffs, tariffs, tariffs. They want to see deregulation. They want to see increased in energy output, and they want to see those tax cuts. That all depends on getting this bill through Congress. So Stefanik's got to stay where she is.
What's real in Florida right now, Rick? Sometimes we get a little bit ahead of ourselves. This Fabrizio poll that Jeannie mentions shows Josh Weil, the Democrat, 3 points above Republican Randy Fine. This race has turned upside down, and this has got a lot of people worried in Washington to the point where Elise Stefanik's career is now changing before her eyes. Do you believe this turn?
Yeah, I think that voters are kind of grumpy. They don't feel like they're getting what they wanted in the first 60 days. We see it in a lot of different surveys around the country. This election that just happened in Pennsylvania, state Senate seat, Democrat wins, Joe Malone, in a Trump plus 15 district, right? Trump won that district by 15 points. and the Democrats just won. So we're seeing a lot of trends that could portend a very ugly 2026 midterm election. And the last thing they want to do is take chances. I would say, too, Tony Fabrizio, great pollster, known him for years. One of the reasons they probably put this out is because people were ignoring it. That district they thought was a walkover, and they need money, they need more effort, and it's a clarion call to pay attention to what's going on down there, because the last thing they want to do is shave even closer a two-member margin in the House. But it looks a little sloppy right now. I think that ambitions overran capabilities in this case, and there's a lot of politics to be played out. But it makes total sense to tell Stefanik, who won by 24 points in a re-election, that we just don't need another election right now. So stay put, and we'll figure out what we're going to do later.
Well, but as we look ahead to 2026, Jeannie, is it sending wider signals about anything other than current discomfort? Is it sending signals about candidate quality, the kind of people they want to be putting up in these races in the future, who President Trump should endorse? I just wonder what the longer term implications here are.
You know, I think for Donald Trump and for the Trump administration, they understand they are working against the clock. If they are going to go big on reconciliation, that has to be done now. You know, traditionally, historically, they would not have a very good midterm, and we've seen that repeatedly in the modern era. But I'm not even sure they're looking there at this point. And of course, as we talk about all these elections, we can't forget that we've got the Wisconsin race next week, and that's the Supreme Court in Wisconsin. And what we heard out of Elon Musk was fascinating. He's saying on X he's going to be in Wisconsin on Sunday, and anybody who voted and goes to his speech on Sunday, he's going to be handing out a $1 million check, 2 of them, to voters in that race. Again, something just speaks to the fact as to how seriously the Trump administration and his team are taking these special elections that are going on, and very, very concerned about Democratic wins in these races next week.
All right, Jeannie Sheehan Zaino and Rick Davis, our signature political panel on this Friday. Thank you so much. They'll, of course, be back for more in the late edition of Balance of Power at 5 p.m. Eastern Time this evening. But we still have to round out this early edition, and we're doing so on what is a tough day in equity markets. We're down now at the lows of the session on the NASDAQ 100, down 2.6%. And this is on the day of CoreWeave's debut, not going too well after an IPO at $40 a share. We are well below that now. Charlie Pellet is tracking all of that for us from New York. Hey, Charlie.
Well, hello there, Kaylee. Lots of moving parts to this market. You mentioned CoreWeave, so let us begin right there. We have got CoreWeave shares now down by 4.6%. A couple of minutes ago, saw a move lower of 6% in the stock. First day out, CoreWeave slipping in its market debut after the cloud computing provider raised $1.5 billion in a downsized IPO, but right now we have got CoreWeave again trading lower. CRWV on the ticker, 38.35 where we stand right now. CoreWeave is down by 4.2%. All of this, as you correctly point out, on a down day for the rest of the market ever since the open this morning, to the right and lower. Right now the S&P down 113, a drop of 2%. We've got the Dow down 720, down by 1.7%. NASDAQ moving lower now by just about 2.7%. The NASDAQ Composite Index down 486 points, while the NASDAQ 100 Index trading lower by 2.6%. Broad-based selling. Russell 2000 index of small cap shares right now down by 2.5%. The 10-year 4.25% with a 2-year that's yielding 3.90%. Gold was trading at a record right now up $22 the ounce to $3,079, up by about 0.7%. A retreat for West Texas Intermediate crude down 0.8%, $69.37 a barrel. And Bitcoin a sell-off there, 4% lower now, 83,777. But again, to keep it all in context, we got the S&P down now by 2%. AppLovin has hired a law firm to investigate short sellers' allegations that the mobile ad company is fraudulently juicing ad performance numbers on its platform. That follows a Muddy Waters report yesterday. Right now, AppLovin shares, they are advancing. We do have AppLovin today after yesterday's decline, up by about 4.3%. Earnings news, Lululemon Athletica plunged challenging after the activewear maker's annual forecast for sales and profit disappointed, stoking worries that growth will continue to be weak in American markets. Lulu down by 14.8%. This comes after Nike reported earnings last week. We got Nike down today by 3.6%. Back we go to Washington. Balance of power continues. Lots going on in D.C. today. Once again, your hosts, Haley Lyons and Joe Matthew.
It's a brutal market. Charlie, thank you so much. At World Headquarters in New York, Charlie Pellet, as we turn to Pituffik, Greenland, here on Balance of Power, home of the northernmost base for the U.S. Space Force. You may not have known that, Kaylee, but that is where the vice president is found today. J.D. Vance, not just the vice president, the second lady's along for the ride, as is someone we've been talking about a lot this week, Michael Waltz, the president's national security advisor. Presumably, this is a round-trip ticket for all of them. They're not going to be there for long either. A couple of hours?
Yeah, like 3 hours on the ground after. It's going to be collectively, I think, 12 hours in the air. It's also 18 degrees Fahrenheit in Greenland right now. So
yes, very cold.
They looked, pretty
You might
cold
have seen J.D. Vance, according to the pool report, stepping off the aircraft, quote, "It is as cold as S here. Nobody told me." We're actually waiting for him to start speaking, and it's interesting, Kaylee, we got a bit of a readout on what he's going to be talking about here, the mistreatment of the Greenlandic people, treated like second-class citizens, allowing infrastructure on the island to fall into disrepair, his message to Danish leaders today.
Yeah, he's basically suggesting that Denmark is not being a good steward of this territory that the Trump administration has made it very clear they would actually like to have control over. They think it is strategic for our national security when we consider our positioning in the Arctic. The problem is the Danish, who, by the way, are NATO allies of ours, part of this wider alliance, are not too into the idea, and they've been pushing back on this notion quite heavily, and that is also why, in part, we have seen what was the initial more broadly planned trip being scaled back to just this visit to just this base.
Yeah, they're way up north for this, and only for a couple of hours here. Remarkable to hear from John Rebek Clemenson of the Danish Defense Academy. Told TV they're the biggest foreign policy crisis since World War II for Denmark.
So let's talk about that crisis, if it is indeed that big, and turn to Rachel Rizzo, who is here with us in our Washington, D.C. studio. She's non-resident senior fellow at the Atlantic Council's Europe Center. Thanks for being here on Bloomberg TV and radio. Rachel, is this really where we are? Is this a World War II or a crisis we haven't seen since the World War II era with what is an ally of the United States?
Yeah, I mean, over the last few months, Donald Trump has been extremely aggressive in saying that he wants the United States to acquire Greenland. Now, J.D. Vance can go to Greenland and say, you know, Denmark has not been a good steward of this territory, but this goes a lot deeper than that. There are critical raw materials there that are untapped gas and oil resources. It's a strategically sensitive location up in the Arctic, especially as Russia and China increase their military exercises up there. So there's a lot more to it than just going to Greenland because Denmark has not been a good steward of this territory.
Well, are those good reasons? Speak to the strategic aspect of that. We already have a Space Force base there. We can obviously go there as we see fit. What would owning the territory do for us that we don't have now?
Yeah, that's, I think, the key question here. I mean, we do have permanent military presence on Greenland. We've had it there for decades. And as I said before, it is strategically important. But remember, Donald Trump is very focused on this economic competition with China. And right now, China owns the mining, processing, refinement of about 80% of the world's critical raw materials. 25 of the European Union's 34 critical raw materials are located in Greenland. Now, all of this is untapped wealth, of course. This is a harsh territory. It's under a lot of ice. This is a small economy. There's only 56,000 people. They're heavily reliant on Danish subsidies. So that wealth is there, but it's expensive and it's hard to get to. So this idea that we're going to acquire Greenland and somehow reap all of these benefits, I think is a stretch.
Okay, so when we consider the potential reward here, which with the potential risk of disrupting a relationship with an ally, I do wonder when we consider Denmark and NATO more widely and potential tension in that relationship that could be further amplified by this. It already is pretty tense. Does this actually serve Russia, which theoretically with an acquisition of Greenland or what have you, would be trying to counter to a greater degree because it may create more division between the U.S. and its allies?
So this is Vladimir Putin's favorite thing. When NATO allies are at each other's throats and there are fissures and divisions within the alliance, he loves to come in and exploit those divisions through things like cyber warfare, hybrid warfare. But, looking at Greenlanders, there have been polls that have been done. 85% of Greenlanders do not want to be part of the United States, but also there's polls done in the United States as well. 70% of Americans don't want Greenland as part of America either. So overall, this is just a really unpopular idea. It's also a really unpopular visit. They've had to scale this visit down. And it's creating a bunch of tension with Denmark, with our NATO allies. And I think that the quote you said earlier, that this is creating a crisis that we haven't seen for quite some time, is very true. And it's going to be interesting to watch how this plays out, I think.
Vladimir Putin at a policy forum yesterday. It can look surprising, he said, only at first glance, and it would be wrong to believe this is some sort of extravagant talk by the current U.S. administration. It's obvious the U.S. will continue to systematically advance its geostrategic, military, political, and economic interests in the Arctic. So is he going to help us do this?
So that's really interesting, because that sounds like something that Vladimir Putin would say about what he's done in Ukraine, right? It's this very imperialistic talk about regaining territory, regaining this greatness that has been lost. This is kind of Putin's approach to this, but it's also Donald Trump's approach to the United States and our foreign policy. So I think when it comes to Greenland, there is a sense that he wants to counter China, but also counter Russia in the Arctic. But again, the steps that would have to be taken for this acquisition to actually go through, and the expense that this would cost the United States, is extravagant. So I think we need to keep that in mind when we think through the realistic outcome here, and the benefits that the United States would be able to reap from this.
Well, and I wonder if there's a parallel to the efforts that are currently underway, still being negotiated, for the U.S. to have rights to minerals in Ukraine and other, according to our reporting at least, in a revised deal, right of first refusal essentially for investments in infrastructure. When we're talking about the kind of investment it does require to build out that capacity, to get the ore out of the ground, to get it where it needs to go, how realistic are those objectives on the part of the United States?
So, as I was mentioning, Greenland is harsh territory. This is the northernmost island in the world. It's the largest island in the world, but it's also under a ton of ice. So this would be very expensive. But, when you compare it to Ukraine, we don't need to own Greenland in order to help develop it, and in order to help, reap some of those benefits that could come from potential mining. I think we're looking at benefits that would happen years down the road. We're not looking at months. Like, this is a serious investment that would take a long time to actually come to fruition. But you can draw parallels here when it comes to what the president is trying to do in Ukraine. They're the breadbasket of Europe. They have a ton of critical minerals as well. So I think it just goes to show that you don't need to acquire a territory to be able to develop it and reap economic benefits from it.
Would it help to acquire that territory if you're building a so-called golden dome that the president has talked about? Would we be positioning missiles, for instance, in Greenland?
So the interesting thing about this is that I don't think the president has actually sat down with Denmark or the Greenlanders and said, here is what we actually want. He's had these not even thinly veiled threats. And I think the Greenlanders are sitting here thinking, have a conversation about what you want in terms of U.S. permanent presence here. Do you want more missiles? Do you want a golden dome, as Donald Trump has talked about? And I think that there would be some sort of negotiating possibility there. I don't think that's totally an off-the-wall idea, but they have to know what the United States wants in order to come to the table, and I don't think that this administration has taken that approach yet. And I think it would behoove them to maybe change their approach if this is really what they're looking for.
So instead of going there to scold, J.D. Vance could presumably be sitting down with officials to talk about these issues today, right?
Absolutely.
Not doing that, though.
They could have been doing this for months. And, Donald Trump pitched this idea back in 2019. This isn't new, but he wasn't that serious about it back in 2019. He sort of mentioned it. Other presidents have mentioned this in the past as well, back in 1946, back in 1867. So it's not a totally off-the-wall idea. But this approach that he's taking, it's extremely provocative. It's seen as extremely aggressive. And the Greenlanders and the Danes are sort of backing off and, are on the defensive, clearly. So I think that it would probably be a good idea for them to sort of change their approach here if they want to have a cooperative relationship, which I would assume that they would like to have a cooperative relationship given the strategic vulnerability of the assets that we have in Greenland.
Well, and when we consider in our final moments here, Rachel, this notion that a lot of what Trump is saying now hasn't changed from what he was saying in his first administration, inclusive of Denmark and other NATO countries who he thinks needed to pay more in their fair share, that Europe should be investing more in its defense. That does seem to only really be changing now, though, even though they knew he was coming into office and has espoused these ideas in the past.
Absolutely. And I don't want to criticize Biden too much, but I do think this message that he sent the Europeans that the United States is back after he won the election in 2020 ignored a lot of the political things that were happening under the surface. And the Europeans, I think, should have been preparing more over the last 4 years. But when it comes to Denmark, Denmark lost more soldiers per capita in Afghanistan in support of the United States than any other NATO troop contributing nation. So when J.D. Vance says that Denmark is not being a good ally, let's actually remember that they're increasing their defense spending along with all of the other NATO allies are increasing as well. And let's, I think, have a better relationship with Europe. I mean, this is a really kind of pointless fight that we're starting.
It's really great to have you. Thank you for coming and sharing the insights. Rachel Rizzo, non-resident senior fellow, Atlantic Council's Europe Center. Kaylee, as we watch J.D. Vance make his visit to this base, imagine this, locked in ice for 9 months out of the year, this Space Force base. It is in constant darkness from November to February and constant daylight from May to August. Quite a lifestyle.
Quite a lifestyle. Quite a contrast to here in Washington, where
True
the
enough.
sun shining, the cherry blossoms are out, everyone's flocking to the tidal basin. We're at least warmer than J.D. Vance and the
Big
Second
time.
Lady are right now.
But they'll be back, I guess, within hours here
Yep.
on a 2-hour tour of Greenland. Cherry blossoms peaking, as a matter of fact, this weekend. It'll be 80 tomorrow. Meet you back here at 5 p.m. Eastern Time for the late edition of Balance of Power. We'll have a lot more to cover right here on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. I am Carol Master, along with Tim Stenivek. We're live here on Bloomberg Business Week Daily, and we've got a sell-off underway. Certainly when it comes to U.S. stocks, Tim, almost all of the major industry groups in the S&P 500 are down, except for utilities. Kind of a risk-off trade, safe to say. That group's up about 1%.
Yeah, we're going to have more on the markets in just a minute, but suffice it to say that the NASDAQ composite is down 2.6%, the S&P 500 is down 1.9%, and the Dow down 1.6% as we speak.
All right, so stocks down, bonds up, tariffs slowing growth, a plunge in consumer sentiment here in the United States, a pickup in prices in the U.S. There's so much for investors to worry about. So that is all top of mind for us in the next 60 minutes. Having said that, we're going to get into those inflation worries, less spending. No one said it would be easy for the Fed. We'll see what our Mike McKee has to say about all of it.
Also, sorry, CoreWeave, not easy to be the hot and highly anticipated IPO in a volatile market. Down now about 0.9% from where it opened, but it opened below that $40 IPO price. We're going to have the details on that a little later in the program.
Plus, we're going to get into Vegas, the latest to lure the rich looking to flee a possible wealth tax. That story among our most read on the Bloomberg today.
And we took it. Our team did too. The news quiz for risk takers. It's called Pointed. And we've got a great guest coming up in the 2 o'clock hour.
Can we just say we kind of love doing it?
Yeah, it was really fun.
And we were a little competitive about it.
Carol's just saying that because she won. She beat me, which is...
what can I say?
I will say it's rare in the news quiz game when you actually beat me, Carol, but you got it this time.
We are moving on, no doubt about it. All right, let's get a check on that trade because we do have selling across the board for the most part here on this Friday. Let's get to Charlie Pellet.
Hi, thank you very much. And here's what's going on. The Dow, the S&P, NASDAQ, very much in the red. Got to begin with CoreWeave, though. The IPO of the day, closely watched, bouncing around, still lower, down 0.3% right now. CoreWeave at $39.85 went out at $40 a share. So the stock is slipping in its market debut after the cloud computing provider raised $1.5 billion in a downsized IPO. The Dow, the S&P, NASDAQ, all in the red. Stocks are tumbling. Risk assets being pummeled by everything from renewed tariff concerns to signs that inflation remains sticky, while consumer sentiment and spending wobble. We've got you covered on this throughout the afternoon on Bloomberg Television and Radio. The S&P right now down 105, 55.87 where we stand, down 1.9%. The Dow down 668, down by about 1.6%. And NASDAQ now down by 459 points, down by 2.6%. 10-year 4.25%, the 2-year 3.91%. Gold up $21 the ounce. Going to see a record there at $3,078, up 0.7. Crude, West Texas Intermediate down 0.8%, 69.35 the ounce. And Bitcoin right now, we've got Bitcoin actually 69.35 the barrel on WTI. Bitcoin is down 3.8%, 83,981. Lululemon Athletica shares plunging after earnings, down now by 14.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We should point out those stocks, while they are down, they're off their worst levels of the session, just coming off the bottom. And CoreWeave actually in positive territory, now just around $40.55 a share, so up about 1%. We're going to keep an eye on this one, and we're going to get into it a little bit more deeply in just a moment. First up, though, as Charlie mentioned, you heard stocks are down overall, bonds up following today's batch of U.S. economic data that showed a pickup in inflation, weaker than estimated spending, and the latest update to the Atlanta Fed GDP now pointing to a negative growth in the first quarter, even after adjusting for gold imports. It was revised lower to down 0.5% from up 0.2% previously after today's weaker than expected spending data. We needed to do an economic roundup.
So we got the guy with us to help us with that. That's Bloomberg News International Economics and Policy Correspondent Michael McKay.
Cowboy to do the economic roundup.
Well, you were just in Houston.
Dallas.
Oh, I'm sorry.
Close.
Dallas people they wouldn't like that.
I was thinking of your Boston Red Sox, right?
Yes, they're in Dallas.
Okay.
And they won last night, so.
Okay, good. That's what we care about. Okay. Do we have a problem?
Well, now you can use the NASA thing, Houston.
Gerald had that written in there.
Yeah.
We're trying to get there, Mike. Do we have a problem though?
We have black clouds on the horizon, put it that way. We don't know if the storm is going to actually hit, or if it does, how bad it's going to be. But definitely, we saw weakness in spending. The spending that we did get up 0.4 for the month after 0.3 decline in January. Basically was in durable goods. So you get the impression that people were pulling forward purchases, trying to get ahead of tariffs, which is probably also the story that we saw in the Michigan sentiment numbers today. With this was the final update. We normally just talk about the preliminary, and that doesn't usually move much. But this time we saw a drop in the headline number, and a drop in expectations fairly strong to 52.6 from 54.2. So people think there's going to be a problem 6 months from now, and you can see that reflected in the inflation expectations numbers.
Which was the most important data point that we got this morning? Which one's the one moving the markets right now?
It's probably the inflation ones.
But that's interesting, because when those came out, we didn't see. I mean, when the market opened, it didn't seem like the market moved a lot. The equity market, at least, didn't move a lot until 10.
Well, that's what I mean. The inflation expectations numbers.
Oh, the inflation expectations.
Not the inflation numbers.
Okay.
We got basically what was expected with the PCE, because that's an indicator that's the way it's put together. Economists can forecast it pretty accurately, and it was only off by 1/10 in the core on a year-over-year basis. So it was the inflation expectations numbers on a one-year basis. People think inflation this year is going to be 5%, and 5 to 10-year inflation is going to be 4.1%. These are significant moves, and I wouldn't think the Fed is terrified, but they're keeping an eye on this. They don't want inflation expectations.
Mr. Mike, can there be 5% inflation?
Oh, sure. This is only the highest level since 2022.
Yeah.
Remember, we had 9% inflation. And that's part of the thing here, is that people think this is possible because they saw it happen. And so now the idea is, we're going to get tariffs. It's going to be a tax on everything we buy that's imported. And so people are thinking, well, I'm going to be paying more. And the more I hear about it, the worse it sounds. Especially, you got Donald Trump saying 25% tariff on imported cars.
Right.
And a lot of the American cars we buy come from Canada and Mexico. The American marks, put it that way.
Is that what is attributing to higher inflation expectations? Is it just tariffs?
It's basically tariffs. We haven't seen any real inflation news in the actual inflation figures that would move people's expectations. In general, inflation's been coming down. It's gotten stuck a little bit, but it's not moved up significantly. So you got to be looking at the headlines for what's going on.
One thing I do wonder is how quickly do we start to see the actual tariff impact in economic data points? I thought I heard something this morning on surveillance that said it takes a few months for it to work its way in. So when will we start to, because right now a lot of it is sentiment, right? Concerns about things. But when the reality hits and we see those prices, like when will we see that?
Well, I would look for it sometime in the summer. You get the tariffs on automobiles. Dealers generally have about 2 months worth of inventory in their lots on a rough basis. So they'll sell through those, and then when you start to get replacement for those, the costs will have to go up. The same thing with the other tariffs he's going to put on next week. We don't exactly know what they're going to be, but suppose he puts on tariffs on fruits and vegetables from Mexico. Depending on when those tariffs become effective, you'll start to see those sooner than you would other things. And then there's the intermediate goods, the stuff that goes into other stuff that comes into the country, and that'll just depend on how soon it gets put in and how soon those things go on sale.
All right, we got to leave it there. That is certainly, though, something that investors are keeping an eye on, all of that economic data. Mike, thanks so much. Have a great weekend. Bloomberg News international economics and policy correspondent Michael McKee. So that is the key economic news you need to know, and that is certainly impacting today's trade. We've got another big indicator of market health here in the United States.
And that takes us to the highly anticipated IPO of the NVIDIA-backed CoreWeave. CoreWeave shares opened up at $39. It was 2.5% below the IPO price, up 2% though. Right now, just in the last 9 minutes or so, Carol.
Yeah.
They went from the red to the green. The offering did raise $1.5 billion, 37.5 million shares priced at $40 apiece. The deal was downsized, though, from an initial plan of 49 million shares. Who is said to have bought the shares? Also super interesting. So let's get into all of that and more with the dynamic duo of Bloomberg News US IPO and deals reporter Ryan Gould and Bloomberg News equities reporter Bailey Lipschultz here in the studio. Bailey, on the price action, why did we see the reversal here?
Probably bankers utilizing the green shoe. So especially with a deal like this. So you kind of use the shares. With the thing with it, when you do an IPO, you sell a bunch of shares, and then banks can buy other shares at the IPO price. So typically, the whole mechanism operates to basically give some form of balance with the deal. So I was talking to a few bankers away from the deal.
Sounds orchestrated to me.
It's orchestrated. I mean, don't ask Bill Ackman about it. He has some pretty strong thoughts on it. But I was talking to a banker away from the deal, and he was basically saying, when you see a deal like this, where so much of the book, as we've reported, has been allocated to a handful of investors, people will get jittery. So if you see the stock dropping and you're a hedge fund who bought this to make a quick buck, you want to get out as quick as you can. And then the banks will wait for that kind of rush of volume, help stabilize the price, and then that can set up for, you know, down 2.5 to up 2.5, but still marginal.
Is that not normal to have, what, half of the book allocated to the 3 largest investors?
That is tighter than I can think of in recent memory. We normally will have some deals that are, they call them clubby, but as we reported, half the book to 3 investors, so $750 million of stock chopped up. And then if you look even further at our reporting, top 15 took 90% of the deal. So very tightly allocated to almost friends of Morgan Stanley, if you will.
All right, clubby, friends, all that good stuff. Having said that, Ryan, going into this, it was downsized. So we had reduced expectations going into it. Based on that, and we are now showing a little bit of a gain, is this a good debut, a bad debut, or neutral?
I think it's probably slight. I don't want to be that person, but I think it is still slightly too early. Let's see where we are at 4, because I think, you know, to the green shoe point, sure. But I was also talking to Michael Intrator this morning, the CEO of CoreWeave, and, you know, he was quite quick to point out, aside, you know, away from the noise that we've seen this week in markets and, you know, just given where the NASDAQ is and the S&P is today, CoreWeave is not like most other tech companies that some of these investors, you know, would be putting orders in for. I mean, his view is that it's quite capital intensive. And it is, just based on the business model of CoreWeave. And so his view in telling me this morning on the phone was that investors are going to take some time to actually get their heads around how we do things. And, you know, it's going to be a little bit of a process. So I think you could probably see some volatility for a period. And, you know, I mean, we're at, you know, 40.91 now. It is conspicuously in that $40 area, you know, the price there.
Is that just CEO speak? To explain maybe some of the difficulties?
Forgive me. Ask him, Carol.
I don't, like, know how should we, we're smart here at Bloomberg. Like, how do we read that?
You know, and I put that to him. And, you know, I think there's a lot going on. I mean, you've obviously got the Microsoft headline this week, which we spoke about yesterday. But then at the same time,
their biggest customer.
It is, yeah, and you would have to imagine in there among that sort of, you know, taking 50% of the book too. I'm sure in and around that area. And you know, I actually put to Michael Intrator this morning around sort of the NVIDIA angle, and you know, again, away from some of the noise, he said that without NVIDIA and without the other 27 investors, this IPO wouldn't have got over the line.
Interesting. Okay.
So why did they do it then? Or is it because they knew they had those backstops?
I think, you know, for a company like CoreWeave, the thesis is quite clear. It's just it's a valuation mechanism right now if you're an investor, because I think, you know, the free cash flow is very good. I mean, people are generally quite comfortable with the leverage, but it's always coming back to sort of some of the concerns around the customer concentration. And, you know, they're quite quick to point out that the OpenAI contract that they agreed, you know, quite recently, almost $12 billion is a boon, and you know it is, but at the same time you're still faced with 77% of your revenue on paper coming from essentially 2 customers. So regardless of what sector you're in, whether you're AI or otherwise, people are going to look at that and think, is that okay for us? And you take a view, right?
Yeah.
But Bailey, even though this is a little bit different of an IPO, it's certainly a canary in the coal mine or some sort of bellwether for other companies that are on the sidelines right now thinking about going public. What's at stake here?
A lot, but also not a lot. Okay. So put it this way: the biggest
pick a side.
The biggest IPO of the year was Venture Global. Similar downsize, cut the book by about 40%, priced poorly, traded poorly, down north of 57%. When I talk to bankers and investors, they were vocal. This is a one-off. We're not worried about it. This deal comes out. Talking to bankers yesterday, we're not too worried about it. But it begs the question: when will people be worried about it? Because when you have 6 of the 10 largest U.S. IPOs year to date trading below offer, you can point to the market being down as much as you want. But at the end of the day, people buy IPOs to outperform the market.
Right.
If you're not getting a day one pop or even a month later outperformance, that starts to make people second guess, why am I going to allocate resources to a private company that I've maybe met once or twice when I can buy your direct peers at a discount? And that's kind of what's been playing out.
It also makes me wonder, at Bloomberg Invest this year, I talked with the president of the New York Stock Exchange, Lynn Martin, and the expectations were that this was going to be a better year for M&A, for IPOs. Highly anticipated was CoreWeave and some others that were substantial in terms of their size. So I'm just kind of wondering, is there something systemic going on in the IPO market? Or is it just, once again, because, give us some context in terms of the last few years.
So we're entering now the 4th year of very lackluster IPO offerings.
Right.
So ever since the market really got shut, late 2021, early 2022, you've had dribs and drabs. ARM has been terrific. Reddit has performed, outside of the pullback, all things considered, quite well. But when we've had 3 years of bankers and CEOs pointing towards the market not being there, even though we're at all-time highs, now you're dealing with a market pulling back. A number of companies, early investors may be saying, hey, we penciled in 2025. We need to get this puck on the ice. And when Bloomberg Invest was playing out, the VIX was back above 20. We're back above 20 again. That's where people on the banking side look at as okay, maybe we should rethink this, or we need to be more diligent with how we price these deals and how we communicate to investors. But there's, as you mentioned, since March 14th, the market's been choppy. Klarna, StubHub, eToro, and Integrity Insurance have all flipped public. So they've opened the door to going public.
But go ahead, Ryan. I know
No, I
you're
was just
going
going
to
to jump in and say, I think it points to a wider question that's going on between investors, large, tier 1 investors in the banks, around, what is the true quality of most companies trying to go public these days, and how much of a discount is necessary to get them over the line. I mean, we've talked a lot about, I think, on the desk, certainly around the nature of the IPO discount. It has narrowed, in recent years, but is there an idea that it could start to widen again, given some of the price pressure that we're seeing in some of these debuts?
I also think about, this is something I know you guys cover, and we talk about, Tim and I, the private markets, and just, again, there's so much cash out there. I mean, how old is CoreWeave? It's been around for...
I think young. 2017,
It's a younger company. All right, because we have seen a lot of companies that are able to stay private for a lot longer.
I mean, look at Klarna, right? We talked about that the other day.
Yeah,
I mean,
this
how
is like
old
a
it
company
is.
that's almost as old as Facebook.
Yeah.
It's wild.
Yeah, so it's kind of interesting. All right, so then what's the outlook? We got just about a minute or so left. I mean, Ryan, how are you thinking about this today and maybe what's to come? Or what are you hearing from
I mean,
Wall
I
Street?
think the point on private capital in general is a prescient one, because, there is someone I was speaking to this morning who was away from this deal that we're talking about today, and they're kind of saying, our IPO is again being seen as sort of the last resort, as opposed to a sign of strength. And, what does it mean for those who look to go? And, Klarna could, in theory, go as soon as next week, but are they?
Well, Bailey, you mentioned all these companies that in the last few weeks have flipped to going public. How much can they actually delay just in the last 30 seconds that we have?
There's no rule. So technically you can be on file for as long as you want. You just pay lawyers. To Ryan's point, Klarna, the earliest they could launch a roadshow would be Monday. So that's what we'll be watching. But again, tariff day is next week, and who knows what's going to go on.
Well, hopefully for your sake, for the weekend, I hope that doesn't happen.
Get a break, everybody. Right now, CoreWeave just up a hair, so it's above 40, but it was just below 40 a moment ago. Guys, thank you so much. Bloomberg News U.S. IPO and Deals reporter Ryan Gould and Bloomberg News Equities reporter Bailey Lipschultz right here in studio. Coming up next, we look at another company that IPO'd last year. We mentioned it to much fanfare. Let's just say, though, stock's been under some pressure.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. The latest on CoreWeave right now. The stock is trading higher. CoreWeave up now by 1.6% in its market debut after the cloud computing provider raised $1.5 billion in a downsized initial public offering. CoreWeave right now bouncing around, but up by 1.6%. The Dow, the S&P, NASDAQ all tumbling. Risk assets being pummeled by everything from renewed tariff concerns to signs that inflation remains sticky, while consumer sentiment and spending wobble. Right now we have got the S&P 500 index very much in the red, very close to session lows. Slight bounce off the bottom, down 1.9%. The S&P down 109, 55.84. The Dow down 698 points. The Dow down 1.7%. NASDAQ, meanwhile, is down 456 points. That is a drop of 2.5%. But to put it all in context, S&P down by 1.9%. 10-year, 4.25%. The 2-year, 3.91%. Gold up $23 the ounce to $3,080, up by about 0.7%. And West Texas Intermediate crude down 0.8%. 69.38 for a barrel of WTI. Eli Lilly's Alzheimer's disease drug, Kisunla, failed to get the backing of European regulators who said its benefits don't outweigh the risk of potentially fatal bleeding in the brain. Lilly shares down now by 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live here on Bloomberg Business Week Daily. We mentioned this stock actually in the last segment where we were talking about the CoreWeave IPO, and that is Reddit. It's also on our radar today. The gloomy sentiment around the company has failed to dissipate after its shares fell 50% from a February high, with volatile technology stocks under pressure. A little perspective, as we like to do here at Bloomberg, stock is up about 209% from its IPO, Tim, just about 1 year ago.
Okay, with the trade concerns and the outlook for the social media platform, here with us is Bloomberg News Equities reporter Carmen Reinecke. She joins us here in the Bloomberg Business Week studio. What happened? I mean, it had a great IPO, a great debut, and at the end of the year, things were looking really good. What's
Tim
happened?
spends a lot of time on it.
Yeah, I actually spent so much time on it that, you know, they do the Spotify Wrapped thing. Everybody does the Spotify Wrapped thing. Reddit had one, and they showed me like the data, like how much time I spent on it, and my reaction to that was deleting the app from my phone because I was like, I'm wasting my life with this
They're
thing.
sending you a hat, a T-shirt, a sweatshirt.
Enough about me, though, Carmen. What's going on?
Reddit had a huge run-up. It was a great IPO, great performance last year. Got really swept up in the AI wave that we saw across, the entire technology space for the most part. And then in the beginning of this year, its fourth quarter report fell just a little bit short of user figures. There was a change in the Google algorithm that sort of hit its U.S. users. That actually seems to have abated, but what's happened on the other side is that it's gotten really weighed down in this overall tech momentum trade where we've seen so much volatility. I mean, even today you can see the Nasdaq's down more than 2.5%, and some of these heavy highest flyers are really just getting dragged down. And so Reddit is a really good example of a stock where there is so much bullish sentiment. There's a ton of excitement, I think, for use with AI, like we were saying, large language models usage with Reddit. A lot of
They train using the data, so people have answered a lot of questions on Reddit. A lot of experts. That's what's great about Reddit. Reddit has then sold the data to the LLM companies.
Exactly.
And they train their LLMs using that data.
Exactly.
Okay.
And there's bulls also point out that there's a lot of growth potential markets here for Reddit, especially outside of the US. So it really is a good example of a stock that's just gotten really hit. And there are other examples as well.
So 15 buys, 7 holds, 3 sells. If I look at the Bloomberg in terms of analyst coverage, still a lot of buys on the stock. Are analysts, though, getting more negative on it, or do they still like the fundamental story but just think it's the tech malaise? What is it?
Yeah, so there was one downgrade recently, or an analyst that initiated at sell after the Google algorithm switch. But other than that, honestly, analysts have maybe tweaked their price targets a little bit, but they've maintained their buy ratings. They think that there's a long-term monetization story here, that there is a lot of growth ahead for Reddit. The one thing that I also think is interesting here is And again, like the entire sort of tech momentum, I think people are a little bit hesitant of where to buy the dip or trying to call a dip, just seeing that there could be so much more room on the downside for a lot of these stocks that have really just gotten the wind taken out of their sails.
I will say like 14% of the float is still short. So there is still some negative sentiment out there that it could go
For
lower.
sure. Yeah.
I don't understand why Google would change its algorithm to show less of this, because people, and the cover of Business Week, of the upcoming issue of Business Week, is about what Google's doing in the face of the rise of AI and how people's search habits are changing and how Google's dealing with that. And one thing that the article mentions is that people started to change the way they search by adding Reddit to the end of their Google search, so it would then show Reddit results because Reddit results were so useful. It seems nuts to me that Google would change its algorithm and not show Reddit results with the same, at the same place.
I mean, you make such a good point. I think there is sort of sentiment out there that, I mean, Google is going to lose some search, right, because of AI. And the other thing I will say is, like, they do change their algorithm on occasion. This is not like a new thing. So it's something that, for Reddit at least, hopefully has abated. It's something that they're used to dealing with. But it remains one to watch. It is really interesting.
Yeah, definitely. And as we said, still way above its IPO price, but it's certainly been under pressure. Good stuff. Thank you so much, Carmen Reinecke. She's Bloomberg News equities reporter. All right, speaking of Reddit, I'm guessing that there's a fair amount of conversations on the platform about avoiding higher taxes, maybe?
There's everything on the platform. But there are subreddits dedicated to taxes. No question.
I bet, right? Like, I mean, you bring up taxes around here, it's going to be a most read story. We all talk about it. And that's where we want to go now. It's actually a most read story, one in particular on the Bloomberg. It's about how wealthy individuals from Washington state are moving to Nevada and other states with lower taxes, citing a feeling that Washington state no longer wants them due to increasing taxes, including a proposed wealth tax, Tim.
With more on her reporting, with us is Bloomberg News Seattle Bureau Chief Anna Edgerton. She's in our Seattle Bureau. Anna, we hear about how people in the U.S. are moving around to lower tax states. Retirees have done this for a long time. As my brother reminds me, though, he lives in Washington, there is no income tax in Washington. But there is this wealth tax, which, does not affect him. What is this and what's going on?
I mean, that's exactly, that's a really good point, because Washington was known as this kind of blue, politically liberal state that was actually pretty business friendly. It's low tax, good place to start a company, good place to grow your company, good place to, be a startup founder and then exit. And it did have this kind of culture of innovation. Last year, there was a ballot initiative to repeal the state's brand new capital gains tax, and that failed. So this was kind of a moment in the beginning of the year when a lot of wealthy people were talking to their tax planners, talking to their tax attorneys about whether it makes sense to stay in Washington state. As this is happening, the state legislature, especially Democrats down in Olympia, started talking about a wealth tax. So something that the outgoing governor had proposed and the incoming governor, Bob Ferguson, had said he was deeply skeptical of. He doesn't think it'll work. He doesn't think it's the way to go. But it looks like Democrats are indeed going to try to pass this. Now, this would be the first wealth tax in the United States, just in Washington state. And it would be a 1% tax on the stocks, bonds, mutual funds, and exchange-traded funds for people with more than $50 million of these holdings. So, novel approach to taxing the rich, and there are a lot of people who are concerned that it'll just make the rich leave.
Does that mean all the Republicans are going to leave the state? Like they'll just move out of the state and make it?
We don't have that many Republicans left west of the mountains, at least. It's not just a Republican versus Democrat thing. I mean, I've talked to people who supported the capital gains tax who think we should have a more progressive tax code. Washington state actually has a very regressive tax code because we don't have an income tax. But the question is not whether this tax is good or bad. What I was really trying to get at is this tax going to raise the revenue that progressives are counting on? Because are people still going to be around to pay it?
You raise a really good question. And as you point out in the piece, Jeff Bezos, long a resident of Seattle, just a couple of years ago, made a lot of news when he moved to Florida. And certainly he's been spending a lot of time in Florida. As you point out in the piece, that probably saved him a lot of money.
Yeah, and he's kind of in a category of his own, or a category of very few. But I talked to some other smaller entrepreneurs who've been successful. They founded companies that did well. Most of them passed through Microsoft at some point. But I talked to one guy, Michael Fraser, who poured everything he had into his startup for 4 years, sold his house so that he could fund his startup without taking venture capital money. When he had that successful exit, he wanted to make sure that he was a Nevada resident before that happened, because he didn't want to pay 7% on that sale when that had been his project, the project of his life for the past 5 years. So it's not just the Jeff Bezos category. It's also, this culture of startup founders, of risk-taking, of venture capital that many city leaders would like to nurture in the Seattle area. But, we also have a lot of societal disruptions to deal with that take tax revenue to address affordable housing, other social services. Public education is a big one. And it's already a pretty burdensome tax code for those at the lower end of the spectrum. It's just hard to figure out how to ask the rich to pay more without that feeling punitive for success or encouraging them to move to a more favorable tax state.
Well, you just make it in every state.
And they would like to do that.
No, it's interesting. I think, Anna, so much about tax policy and how it incents us to do something or not do something, right?
Is that why you live in New Jersey? Because the low taxes?
That's exactly why. Yeah,
Okay.
no, it's terrible. But but folks would say you go to these higher tax places and you get maybe a better educational system for your kids or what have you. But I don't know what's going to be the answer here, right? We've always seen people move south. I have a bunch of family members who've moved down south because their kids are out of school and they're looking for lower taxes. I don't know. How do you see this playing out maybe more broadly, or is this kind of an isolated case? Because I feel like we've been talking about a wealth tax for a while.
Well, this is a really interesting moment to have that conversation nationally, because you have the Trump administration that is trying to extend the tax cuts that they passed in 2017. I covered that as a Congress reporter. And then you have Democrats trying to figure out how to calibrate their response to that. And on one end of the spectrum, you have Bernie Sanders and Alexandria Ocasio-Cortez, who were in North Las Vegas, while I was writing this story. And, I watched the video of Bernie Sanders' speech, and the crowd breaks out in chants of tax the rich. So, there is kind of this conversation happening nationally. Washington State has been on the forefront of a lot of other progressive conversations, like raising the minimum wage, criminal justice questions. And I think there's an impulse to try out some progressive policies here. However, when it comes to something like this, I'm not convinced that it's actually going to raise the revenue they intend. And, like you were saying, tax policy shapes behavior. If you're going to tax investment, you're going to get less of it. If you're going to tax wealthy individuals, you're going to have less of them.
Yeah.
And so we'll see how that plays out over the next few months.
Always an interesting topic. Anna, thank you so much. Anna Edgerton, she's Bloomberg News Seattle Bureau Chief, joining us from our bureau there.
Coming up next on Bloomberg Business Week, it is a real-life horror story for the AI generation. We're going to take you to Levittown. That's next on Business Week.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. CoreWeave shares pushing higher now by 4.2%. Turnaround for that IPO. CoreWeave right now at 41.71. Again, up by 4.4%. Higher in its market debut after the cloud computing provider raised $1.5 billion in a downsized initial public offering. Again, bears repeating. CoreWeave up now by 3.9%. Stocks are tumbling. In fact, the S&P 500 index very close to the worst level of the day. 1 hour, 20 minutes to go ahead of the close, and the S&P is now down 115 points, on track for another losing week. 55.78 where the S&P stands right now, looking at a drop of 2%. The Dow down 739, down 1.7%. The Nasdaq Composite Index lower by 2.7%. 10-year at 4.25%, with the 2-year currently yielding 3.91%. Gold up $16 the ounce. We're looking at a record on the precious metal at 3,074, up by about 0.5%. WTI, West Texas Intermediate Crude, 69.33 a barrel, down 0.8%. And Bitcoin now down by 4.1%, 83,747. Briefly, Oracle shares. Right now, we do have Oracle shares. Right now, looking at Oracle, and the stock is trading lower by 3.9%. The Department of Defense says it will be terminating a plan to use Oracle software to manage its civilian workforce as part of the Pentagon's cost-cutting efforts. Again, recapping, stocks lower, S&P down by 2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, folks, we are living in a time when we do not need to make up stuff to be terrified. Nope. As Bloomberg has often reported, the deep, dark spaces of social media often enlighten us in very difficult ways about the power of online platforms to impact often the unsuspecting.
On that, a new podcast from Bloomberg takes you to Levittown. It's a place that's iconic when you talk about New York City area real estate, historical developments, and it's now linked to a real-life horror story for the AI generation. It's hosted by Bloomberg's Olivia Carville and Margie Murphy. Here's Olivia from the podcast Levittown.
Over the last few years, rapid breakthroughs in machine learning have made it a lot easier and cheaper to make real-looking photos or videos of pretty much anything you can think of. But innovation comes at a price.
I felt gross. I felt like I needed to take a shower. I felt like I wanted to cry. I wanted to throw up. I wanted to scream.
All right, everybody, that is Olivia Carville of Bloomberg on the Levittown podcast, which recently launched. Episodes can be found on Apple, Spotify, wherever you get your podcasts. The two hosts of Levittown joining us now here in our New York studio, Bloomberg News investigative reporter Olivia Carville and Bloomberg News cybersecurity reporter Margie Murphy. She is in our San Francisco bureau. Welcome to both of you. Levittown, it has a place in terms of historical New York City area development. And that's what I think of first when I heard it. But Olivia, let's start with you. Take us back to one New Year's Eve in Levittown.
Yeah, the story really starts on New Year's Eve of 2020. So we've just had the onset of the COVID pandemic, and a lot of people are at home with their families, and a group of high school students in Levittown. As you mentioned, Carol, this is kind of an unlikely scene for a cyber thriller or a horror story. New York's first suburb. You know, a lot of history in Levittown too. It's a place where families move to find a safer community. So a group of high school girls in Levittown discover hundreds of pornographic photos. So these are fake nude images of them have been posted to a porn website. And all of a sudden, the word starts spreading, and more of the young women realize what's going on.
Margie, come on in here because you cover cybersecurity, and I think the leaps and bounds that we've seen in this technology just in a very short time are pretty unbelievable to people who don't necessarily follow the developments day to day. What exactly can be done, and how easy is it to do this stuff?
It's incredibly easy. So
back in 2020, where our story starts, the perpetrator was using pretty rudimentary tools. And as you know, we're all aware, there has been an AI boom in the past few years. And with that has come this kind of cottage industry of nudifying apps, as they're commonly called, and better technologies that make it really cheap and really easy for anyone to create pornographic pictures of people that photos that they've plucked off of social media, essentially. And so the problem is, it's hard to kind of put a number on the amount of images that are out there on the internet. We're hearing a lot of celebrities being impacted, but as we explore in Levittown, we're at the point now where this is happening to normal people, young women, and also children in schools in communities all across the US and internationally.
You know, Olivia, we've talked with you about so many different stories involving social media and younger populations. They continue to be targeted. You know, what is it that's going on? Is it just that a younger generation is just so unsuspecting, or because they're so embedded in the social media world that it's easy for them to be targeted?
Smartphones, social media are ubiquitous in children's lives now. This is the social fabric of their communities. This is how kids talk. They don't call each other or text. They're on Instagram, Snapchat, Facebook, TikTok, and it's a normalization of youth and culture to use these apps. And these Notify apps that Margie's talking about have been rolling out across the country with the push of a button. You plug in a photo from social media where you are clothed, and the technology undresses you in seconds. And unfortunately, when you have young people who are at the point of exploring and developing their own sexuality and live online, this has become normalized. You know, this is what kids are doing in schools now. And I think that the impact of it and the consequences of it, just people don't understand.
Margie, this story touches the quiet suburb of New York, but it's a global story.
Right. When we were looking into it, and we were looking at Levittown, and we, you know, had to look at the website that these pictures were posted on, we really wanted to figure out who was behind this website. Why were they given anonymity? Why were they kind of in the market of exposing and humiliating and enabling harassment of people, yet we had no idea who they were. So in that kind of quest to find who was behind it, we realized that there were people all over the world also trying to do this. Investigators in New Zealand who were trying to help victims there, and even vigilantes online who had heard from people who had been posted on the website and were trying desperately to get their photos taken down. And Olivia and I realized this was a truly international story. We were reading reports of people being posted on that website in the UK and elsewhere in the world. So it really showed us that perhaps it kind of felt like it started in Levittown, but it's in towns everywhere, coming to towns near you.
Olivia, I'm trying to look at this in a way that's, as a parent of young kids, that, you know, with the way technology is changing, I'm wondering if there's not an optimistic way we could look at this, but maybe say this is just a phase that we move out of as a society, because we won't be able to trust any of the things that we see as a result of this technology. Do we get to the point where, okay, this stuff might happen, but it's not a big deal because you can't trust anything you see?
I hope it's just a phase, but I really don't think it is. You know, think about these image generating software tools like Midjourney and Stable Diffusion. People are using these now regularly.
There's like a new one online now that everybody's doing in the last couple of days.
Right, like look at the boom of ChatGPT, OpenAI. People are now like exploring and loving what AI is bringing to the world. And there are positives that come with the technology, but unfortunately, as we've been exploring, there's a real dark side here. And particularly when it comes to young people who, you know, their brains aren't fully developed, they don't understand the consequences, and they may see creating a nude image of a friend as a joke, but it's not. It's child sexual abuse material, and across the country and actually around the world, we're seeing police and prosecutors trying to go after the individuals who are creating the material and sharing it online. I just don't think as a society we've really grappled with what's going on here and how we can educate our youth around Notify apps when, you know, what is a positive use case for an application like that? Where in the world could you possibly say, oh, having technology that could undress you within seconds at the push of a button, that's a great thing for us to create. There isn't. Margie and I tried to explore this. We asked that question. We didn't have an answer.
All right. We're going to leave it there. Incredible reporting again. Olivia Carville, Bloomberg News investigative reporter, Bloomberg News cybersecurity reporter, Margie Patel. It is a 6-session part podcast, and you can find it, the Levittown podcast, on Apple, Spotify, or wherever you get your podcasts. Check it out.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
I so love, because we're kind of cool about a lot of things.
Chill,
but
we're
man,
so chill and cool.
Give us a quiz, Tim and I, and man, it gets so competitive. All right, politics, economics, geopolitics, markets, business, culture, luxury, sports. We love all of it, don't we?
Yeah, we also love a Bloomberg quiz. A new one launching today. Here to tell us about the Bloomberg appointed news quiz is a big friend of the show. Really,
He's family.
We can say family, yeah. Former editor of Bloomberg Business Week magazine, Joel Weber. He's head of Bloomberg Explains. He's here in our Bloomberg Business Week studio. We love quizzes. We love games. I like beating Carol.
I like winning.
Pointed is different, though, Joel. This is not just like, what do you know? You got to know and be confident in what you know.
So, thanks for having me. You're welcome. Great to be back in the studio with you both. I love that you all are this competitive, and this is what we know about our people. Our people are highly competitive. We see that every day, and we wanted to give our super fans and even people who've never interacted with us a way of playing. Right? We have so many verbs that we do. We do watch, read, listen. Why not play? That's Pointed. So Bloomberg.com/pointed will drop you into the game. News quiz, 10 witty questions every single week, written by a trivia master. So this is not your normal news quiz.
Yeah.
And then on top of that, we've made the gameplay really distinct. Do you like to gamble?
If this is gambling, I like to gamble.
There's gambling, but the stakes are relatively low.
We didn't lose any money in
casino.
the process.
So you're going to wager points when you play.
Right.
And then you can use leverages to either amplify your score or hedge if you're not so certain.
How come there's only 3 though opportunities to do that? Because I kind of
you got to use them strategically.
I wanted them more.
Yeah.
Okay,
So
I see.
I'm curious. What was your score?
120.
That's good. It's
Thanks.
above average.
Thank you.
I got 115. Or no, I got 110. Ooh. Sebastian got 115. Yeah, Carol won.
And Sebastian got 115.
Yeah.
Our producers, Elizabeth, what did you get?
Hers was in the double
86.
digits, not the triple digits. That's what I'll say.
So we'll see
And
how good it is.
It's like
based on-
bowling. The higher the
what
score,
did
the
you
better.
get?
It's not like golf.
So the high score is 190. If you play this
Wow.
game perfectly, you get 190. But
Wow.
the thing about this game that's unique is you can also end up with 190 negative, right? We will lose. We will dock you points if you get your answers wrong. So I knew all the answers and I knew exactly how to play the game, and it was to test that we could do it.
Wait, so did you get what? Oh, you got 190.
There's a number of people who have played and aced it so far, so it's happening.
So is it basically like if you pick a category and go all in and then leverage that one? Is that how you do
have to
it?
learn how to play the game.
Sorry,
there's
did
a
I just
couple,
give it away?
No, that's how you play.
Okay.
And so we're eager to see everyone's scores. You get an awesome little readout at the end that shows how you played, and then the game is free to play. If you register on Bloomberg.com, you'll get a little readout that shows how you compare to everybody else. We're going to kick this off on Thursday nights from the U.S., and it's going to be open through the weekend. This is part of, accompanies the Bloomberg weekend. So it's more of a lean back experience. We want you to take your time, be thoughtful, make sure that you actually process the little hidden clues that we've, scattered across the questions for you.
I think people understand the leverage portion of it within the game, but before you actually play the game, you have to know what you know that week. So you're essentially given, 10 categories.
Yep, you got a wager.
It could be politics, it could be technology, it could be IPOs, it could be bankruptcies.
Yep.
And you got to think about what you know for that week.
And you're going to have a little slider that you can weight the category for.
So you have how many, what's the ante that you have?
You have 10 categories. You can go down to 5 and up to 30, right? So you got a wager, whatever you want to put on the line there.
Okay.
Yeah.
So that's why
and it's going to add up to 100.
Right.
And then when you get to a point that you get the tease of the question, that's when you can use your leverages.
It's really fun. It was really fun. And I agree with Tim. There's a lot of quizzes where you've got to be fast. That's part of getting a higher score.
Yeah.
And it was nice to have some time to kind of play with it.
What we've cracked here is it's not testing whether or not you read your push alert, because most of us probably did that, or scanned the headline.
Right.
It's how confident you are in your answer. And that, we think, is a really uniquely Bloomberg thing. We're excited to explore more in this category. This is a new category for us, and we're really, wanting to prioritize, little habit-forming experiences like that.
Is there a lot of discussion that goes on beyond what the questions are going to be? Is there something that happens during the week and you're like...
We obsess over these questions. We've been doing rough draft after rough draft to make sure we get it right. And, this week, maybe there was a certain messaging app that was in the news. Maybe we want to ask a question about that. It's a pretty good way to get people to start playing and challenge each other.
I got that one right, by the way.
There is another, dare I say, another quiz that comes out on Thursday, right?
But that's only for terminal users, right?
We're big fans.
But
Quiz go.
But we will be during the week, we're oh, that's going to be on the Bloomberg quiz. And I have a feeling we're going to do the same thing with this one.
Yep. And look, they satisfy different niches. One is very terminal centric, and you play it for speed and see how you can compare. And we're being a little bit more strategic with what we're doing on Bloomberg.com.
I love it.
Joel Weber.
Good to have you here.
The head of Bloomberg Explains.
And games.
Can you come back more?
Of course. We can do this every Friday.
All right. And don't look at the ansers for next week. So then you can actually take the
play
quiz.
Play it in a real way, Joel.
Yeah, come on. Enough of this.
I would be failing at my job if I didn't play it before.
Just saying, little advantage.
Hey, before we go, I do want to get to some breaking news. Redhead crossing the Bloomberg terminal. Charlie Javis has been found guilty of defrauding JP Morgan Chase in its $175 million acquisition of her student loan finance startup, Frank, following a 6-week trial.
All right, that's been ongoing, so some resolution there. Hey, the close coming your way on TV. This is Bloomberg.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Stacey Lynn in Washington, where President Trump is pressing ahead with his tariff policy toward Canada.
We have Liberation Day, as you know, on April 2nd.
That's the day President Trump's 25% tariffs go into effect for cars produced in Canada. But the president did seem optimistic.
We had a very good talk, the Prime Minister and myself, and I think things are going to work out very well between Canada and the United States.
Canada's Prime Minister has vowed reciprocal tariffs against U.S.-made goods if the April 2nd tariffs kick in. Linda Kenyon, CBS News, the White House.
The president's tariffs have left a lot of uncertainty on Wall Street. Paul LaMonica is a market analyst with Barron's.
There's a lot of anxiety on Wall Street about what's going to happen to consumer spending, what's going to happen to auto sales with the auto tariffs. So, it's sort of cliche to say Wall Street hates uncertainty, but guess what? Wall Street hates uncertainty.
Vice President Vance is making remarks in Greenland and says Denmark has underinvested in the island's security.
What we have to recognize is that if the Chinese and the Russians are going to pursue their national interest, we need a president who's going to pursue the American national interest, and that means ensuring that Greenland is safe.
He's demanding change as President Trump continues to talk of taking control. The U.S. will assist Myanmar after a deadly 7.7 magnitude earthquake hit this morning, killing at least 150 people. CBS Asia correspondent Anna Koren says it was felt as far as Thailand.
Myanmar is prone to earthquakes, but to reach Bangkok, that is unheard of. I've spoken to friends and relatives there who live in the city, and they say they cannot remember the last time there was an earthquake.
Outside a courthouse in Newark, New Jersey, demonstrators gathered as attorneys for Mahmoud Khalil are fighting to keep the case in the state. Bahar Azmi is his lawyer.
This is not any routine immigration case or habeas transfer case. This is a case where the United States government has created a policy targeting Palestinian activists.
And the government wants the case to be moved to Louisiana, where Khalil was sent after being arrested earlier this month. While the Trump administration submitted an emergency appeal today to the Supreme Court in an effort to resume the rapid deportations of suspected Venezuelan gang members, U.S. District Judge James Boasberg just extended the temporary restraining orders he put in place to April 12th. Stocks are tumbling on Wall Street, the Dow down 706 points. This is CBS News. Terms to help you describe exactly what you're feeling.
What a cute little puppy. Now there's a word in the Oxford English Dictionary for your fussing and loving. Giggle from the Philippines Tagalog, among 42 terms from other countries and regions, just added to the dictionary. Oxford says none has a direct English translation, but all fill a lexical gap. Want to express outrage? There's the Malay word alamak, and to describe someone who's behaving like a fool, look to Ireland and accuse them of acting like a maggot. Deborah Rodriguez, CBS News.
Coca-Cola is bringing back its iconic Share a Coke campaign.
They call me help. They call me Stacey.
Starting next week, the usual Coke logo will be replaced with popular first names. They hope you'll see the name of a friend and share a drink. And if you don't see your name, you can still get one personalized in their digital hub. Stacey Lynn, CBS News.
This
is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just under 55 minutes away from the closing bell on this Friday afternoon. Carol Masser, Tim Stenovec, live here in our Bloomberg Interactive Broker Studio. We're bumping along the bottom here, but really kind of a lot of red across the board. Broad-based selling. We got an update on the markets for you in just a moment, but a different, definitely negative tone, risk off again.
Yeah, if you're long this market, not looking so good. The Nasdaq down 2.6%, the S&P 500 down 1.9%. Charlie Pellet's going to have an update and details in just a minute. Hey, on the program today, we got a great Friday afternoon for you all. More than 3 years into Russia's invasion of Ukraine, one American CEO who has more than 300 employees there has a message for us and for the rest of the world.
Yeah, it's been a while since we've had a chance to catch up with them, so looking forward to that. Also, the new billionaires of the AI boom. The rush into artificial intelligence has minted a bunch of fortunes, some worth a collective $71 billion, 29 founders. You've got the list. We'll break it down.
You're not one of them? Yeah.
Cute crickets.
Neither am I.
Not even close.
Not even close. Okay. Should have plastics. Plastics.
Plastics.
That was the future.
Exactly.
Also,
crypto 10, 20 years, 15 years ago.
Yeah, the list goes on.
Yeah.
We live in an unruly world, at least according to a former executive over at Eurasia Group. How leaders and businesses should react to rules being upended.
I also think about their kind of role in these rules being upended. So we got a lot to talk about with him.
Good point.
Hey, let's get going. Let's get an update on the market trade. We're under an hour to go until we wrap up the day and the week. Here is once again Charlie Pellet.
I thank you very much indeed, Laura, across the board. Do want to begin, though, with a developing story we told you about moments ago. Charlie Javis found guilty of defrauding J.P. Morgan Chase and its $175 million acquisition of her student finance startup, Frank, following a 6-week trial. A Manhattan federal court delivered its verdict today against the 32-year-old Javis, finding that the one-time entrepreneur lied and faked user data to convince the nation's largest bank that her site had more than 4.25 million users when it actually had fewer than 300,000. U.S. stocks lower across the board. 53 minutes to go until we wrap up the trading week. We do have on the week the S&P right now down by 1.3%. If you care about today's numbers, we've got the S&P down 1.9%, down 106. The Dow down 671, drop there of 1.6%, and NASDAQ down 456, a decline of 2.6%. The 10-year yield 4.26%, the 2-year 3.91%, gold up 0.8%, 3,081 the ounce, and West Texas Intermediate crude down 0.9%, 69.32 a barrel. Bitcoin, meanwhile, now down 4.1%, 83,687. Bottom line, down day, turbulent week. Lisa Shallett is Chief Investment Officer for Wealth Management at Morgan Stanley. And on Bloomberg The Open this morning, she told us you got to keep the U.S. economy in perspective.
We're moving from an economy that's probably growing GDP at about 2.5% to one that's growing at about 1.5%. That's not a recession. And it's really important, to remember that.
Lisa Shallett of Morgan Stanley. Apple, Meta platforms set to be hit by fines next week under the EU's big tech competition rulebook toward the end of the week, with the iPhone maker facing the added threat of recurring penalties under the bloc's Digital Markets Act. Right now, Apple is down 2.4%, Meta down 4.5%, all part of a broader tech sell-off. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. A big week coming from New York to London and Hong Kong. Investors cutting back risk ahead of next week's U.S. tariff announcements. Liberation Day is how the president refers to it, while keeping cash ready to pounce the moment, Carol, opportunities arise.
Yeah, with more into what's going on, it's great to have back with us Michael McKenzie. He's Bloomberg News rates reporter. He joins us from New Jersey. Michael, I want to talk about this story in just a moment because we are thinking about what's in store, certainly for global financial markets next week. But I want to talk a little bit about the U.S. market today and the U.S. economic backdrop. We did get another batch of U.S. data points. We saw, a pickup inflation, weaker than estimated spending, sentiment numbers about all of this, which is not upbeat at all, it seems. And we did get the latest update to the Atlanta Fed GDP now, which pointed to negative growth in the first quarter. And that was adjusted after today's weaker than expected spending data. How are you thinking about the economy? Has it changed much from the last week or so? Give us an update.
Well, I think one important thing is we've yet to really see concrete signs from hard data that the economy is slowing. What we're seeing is a lot of survey-based data. And again, today's spending is starting to chip away at this idea that people don't feel great, the so-called vibe session. But I think next week when we get more labor market data, in particular the payroll report for March coming at the first Friday of April, that's going to give the bond market and equities as well a better sense of where we stand. And I think in what sort of makes it all so uncertain for the market, and you keep hearing the word uncertainty being repeated endlessly, whether you go to, like I did this week, to a panel breakfast from asset manager, when you're on the phone with traders and investors, they really don't know what to do. And part of that, of course, is that we know these tariffs are coming through. We don't know what the consequences are really going to be. In particular, we don't know if inflation is going to take off or is the economy actually slowing. And I'll be getting close to that moment. Suddenly, some of the hard data, such as the payroll report, tells us, yes, this economy really is slowing. And I think what you're seeing today is mainly risk aversion. So the pullback in equities continues, and we're seeing people come and buy treasuries and also gold.
You mentioned the payrolls report for this month, the one that we're going to get in April, but that's backward looking. In terms of hard data, what else could we see that could either confirm or help us deny that the survey data is correct?
It's mainly going to be labor because the Fed clearly got an issue with inflation. We had a number of Fed speakers this week saying that inflation expectations are rising, and that could become a red flag for the Fed. And I think at the moment, the bond market is telling you one sign that they are expecting the hard data to turn. It will mainly be labor, retail sales, things like of that equipment. I mean, car sales are going to be massive to watch as well. So if we see definitive signs of a slowdown and a rise more in, credit card distress, and also companies unable to sell bonds, then that's going to kind of converge towards this idea that, yes, the economy is really starting to decelerate. It's softening, which was expected this year, but the fear is it could start to really decelerate. And it's worth bearing in mind when we look at treasury yields, they're not back to the lows we saw last year. They're still trading quite a ways above. So there is room here for the treasury market to really rally more. And then for the equity market, any concrete signs of more of a backward drop here in the growth picture, how does that play out for earnings? And at the moment, I think a lot of the equity market trading is really just, let me take profits on I've been long tech 2 years, 3 years, however long you've been long tech. You've had a great run, 2 years of double-digit gains, and park it in bonds and make 4%.
It's interesting.
And just see what's going to happen.
Yeah, Michael, it was interesting. I think Jess Metton had a story out earlier in the week of Bloomberg and talked about U.S. stock market liquidity drying up because of the concerns over trade wars. And I do think about what you're saying about talking to, investors, traders, and if they're holding back, volume, dries up and or at least cuts back. And I think about how that exacerbates potential volatility in the markets or the implications of such. Like, we want a liquid market, right? We want movement in the market. So I just wonder how that might be problematic the longer this goes on.
Well, that's the issue, right? You'll probably start to see, more stress coming through, and you'll see VIX start to spike. And I think at the end of the day, we haven't really seen VIX spike the way it has in past periods when things have got really rocky. So, I mean, we're not, at the moment, again, I hate coming back to this term uncertainty, but for investors, we really don't know what the full ramifications of the tariffs and other policies being pursued by the Trump administration are. What does that really mean for the economy? We're still waiting for the hard data to conclusively show that, yes, this is not just a softening. You had Lisa Shallett earlier You sort of repeated what she said this morning when she said, look, the economy is going to decelerate from 2.5% to 1.5%. And I think at the moment, the markets are operating within that kind of area. But any signs over the next couple of months that the market is actually weakening more, that's going to put the pressure onto cut. But this is a Fed. We've heard from a number of officials. They're looking at the inflationary consequences of tariffs. And if they come in before the hard data conclusively turns lower, this is a Fed that's not going to cut, which is why if you're looking at treasuries, everyone I talk to just wants to own the 5-year, because if the Fed can't go and delays rate cuts, the 5-year would be the best part of the curve to be.
Is there anyone you're speaking to, Michael, that says we don't think the president is going to follow through with these tariff threats?
Oh, absolutely. I mean, this is all part of the whole. I mean, how everyone you talk to, you start saying, okay, what are the scenarios? And it all comes back to, well, is it ultimately just going to be a game of poker here, and that eventually we are going to get deals? Is Canada and the US finally going to sit down and say, okay, let's cut a deal? It's hard to know what kind of deal win you get from the Trump administration's point of view, or even from Canada's point of view.
Right.
I think that just compounds the uncertainty. And everyone's just, it's basically game theory on steroids at the moment for investors. So, but that said, a lot of people I speak to in fixed income, they would love to see credit spreads widen because they want to buy that widening spread. So again, it's all about you're waiting for the opportunity. So I think this is where we're seeing thinning liquidity, thinning volumes in equities and treasuries because people are moving to the sidelines, they're accumulating cash, and they just once they get a clear sign, they want to dive back in.
That's what I was going to say, Michael, just 20 seconds. The point is, though, if we do get some clarity, or if the president provides some longer-term clarity on tariff policy, they're ready to come back into the market, just quickly.
They are. But the one word of warning I got from investors this morning was the reconciliation process for the next budget, that could go all the way through to August. So
Yikes.
It's going to be an uncomfortable summer, maybe, for a lot of investors here in the U.S.
That's a long time.
And globally, too, in the Northern Hemisphere.
Yeah, exactly. All right, have a great weekend. Michael McKenzie, he is Bloomberg News Rates reporter right here at Bloomberg.
Hey, we're down about 1.98%, 2% on the S&P 500 for the day. We're not at our lowest levels of the day, Carol, but we're pretty close to them.
Yeah, we can't seem to bounce off of the bottom, really. Just we've been hovering along it for some time.
55.80.
Yeah, I know, exactly.
Wild.
And if you look at the S&P 500, you've got 408 names to the downside, 93 actually gaining ground. I'm going to have to check my gainers for the close because see whether or not they're still in a decent position.
I'm just looking at the where we were versus a few weeks ago, kind of at the levels that we were at in the middle of March, but going back to basically September.
Coming up, we've got the American CEO with the workforce in Ukraine. He's got a message for us and the rest of the world.
It's 3:39 on Wall Street. We do check markets all day long here at Bloomberg. We have got just about 39 minutes to go ahead of the closing bell. 3:21 now on Wall Street, and we've got stocks very much in the red. Just about the worst level of the day with the S&P 500 index now down 112 at 55.81. Drop there of 2%. We've got the Dow down 702 on the Dow, a drop right now of 1.7%. While NASDAQ is down 483 for the NASDAQ Composite Index, a decline of 2.7%. 10-year 4.25%, the 2-year 3.91%. Gold now up $22 the ounce at a record, up 0.7%. $3,079 right now on gold. West Texas Intermediate crude down 1%, $69.23 a barrel, and Bitcoin now lower by 4.2%, $83,621 on Bitcoin. Victoria Fernandez is Chief Market Strategist at Crossmark Global Investments. She says, yes, the consumer is showing signs of losing steam.
We talk about a Fed put or a Trump put, but really it was the consumer put for the longest period of time. That's what has changed now. All those companies coming out on their earnings, on their conference calls, talking about the concern that they're seeing, Lululemon being the latest example. I mean, I thought my kids alone would help support the numbers at Lululemon with their purchases, but apparently it is not enough.
Victoria Fernandez of Crossmark interviewed this morning on surveillance. Lululemon right now down by 14.9%, echoing Nike, which is now down by 3.7%. Again, recapping stocks lower, S&P down just about 2%. Briefly on that CoreWeave IPO, the stock is now trading higher. We've got CoreWeave shares advancing by just about 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, an update on the war in Ukraine, I should say. An exclusive yesterday from our team at Bloomberg News. The U.S. pushing for a deal that would give it control over major future infrastructure and mineral investments in Ukraine, potentially gaining a veto over any role for Kyiv's other allies. This agreement would grant the U.S. first claim on profits transferred into a special reconstruction investment fund that would be controlled by Washington and would require Ukraine, Carol, to pay for all U.S. military and economic support provided since the start of the war.
Andy Kurtzik has kept a close eye on everything happening in Ukraine. It makes sense. He's the founder and chief executive officer of Just Answer, which matches you with experts such as doctors, lawyers, mechanics, and more who can answer your question. He has more than 300 employees in Ukraine. He joins us from San Francisco, the Bay Area, on this Friday. Andy, nice to have you back with us. How are you, and how is your team in Ukraine?
I'm doing fine. Thanks, Carol and Tim. Happy to be here. And yeah, it's tough in Ukraine. The situation has changed dramatically over the last few years.
Well, you know, Carol asked how your team is doing, and it's a complicated question because you have more than 300 people there. But since we last spoke to you, has the team had to, take breaks to go and actually fight in the war? How has that worked?
Yeah, I mean, our people are getting drafted, and they are going to fight in the war. This war is a meat grinder, and it is killing lots of people on both sides, and they need to keep bringing in more people to fight the war, and that includes our employees.
Including, Andy, those who work for you. Have you lost any members of your team?
We have. It's tragic. We have lost members of our team. A wonderful guy that I worked with closely was killed, and it's a tragedy.
Oh, I'm so sorry to hear that. That's absolutely awful. As I mentioned, it has been a few years since we spoke to you. We spoke to you right at the beginning of the war. Certainly, a lot has changed, including a presidential administration. How have you been watching the way that the U.S. has shifted its view in this administration on how to support Ukraine and end the war?
I mean, it's a complete 180 shift recently with the Trump administration's approach compared to the Biden administration's approach to Ukraine. It is quite a lot of uncertainty right now, and a lot of fear and concern in Ukraine for what might happen.
One thing that we spoke about when we last spoke was the talent in Ukraine, especially on the computer science, programming, engineering side. For years, American companies have tapped into the talent there for jobs that have been hard to fill. here in the U.S. A lot of companies decided not necessarily to continue with their operations in Ukraine as a result of the war. You did, though. You kept your team intact. Explain the reasoning there.
Yeah, so supporting Ukraine is incredibly strategic for us. I mean, these are bright, talented, hardworking folks, and they help. Without them, we wouldn't be able to be where we are today as a company. And so we've really doubled down on supporting them, and it's both smart from a business perspective, but also I think beyond that, it's strategigic from a global perspective. We're investing in the future of democracy and the future, I think, a future innovative partner in Europe.
What did you make of when Tim, kicked off the introduction to you, talked about, the negotiations that are going on, U.S. involvement, looking for control over major future infrastructure, mineral investments in Ukraine. How do you read that?
I mean, it feels like it's gone from an incredibly strategic perspective on the world democracy and really thinking about the future of all of our allies and encouraging democracy to more of a negotiation and a business transaction. And, that's difficult to watch.
Is it also difficult to watch? And I think about some of the optics that some have mentioned, certainly during the inauguration of President Trump, second time around, of very prominent members of the U.S. tech community. And I am curious what you are hearing from some of your peers or others in the tech community about the lack of support that might be coming from some very prominent individuals who could maybe help Ukraine in terms of the future.
Yeah, that has been difficult to watch as well. A couple of years ago, the whole world was on Ukraine's side, and everybody was rooting for them, supporting them, and encouraging their fight for democracy, which is really a fight for us. And it has been disheartening to watch that evaporate over time, and many of those same leaders that were staunchly in favor of Ukraine and out there promoting, Ukraine's democracy are now quite silent on the topic. And so, that's exactly why I feel it's crucial for me to speak up. This fight isn't over. Ukraine's struggle for freedom is a marathon, not a sprint. And, I believe the tech community, known for its innovation, should be standing up and persevering with Ukraine to help them win. So my message to my peers is stay engaged. This is good for not just your business, but it's good for the world.
What hope do you have that you can get the support that you need from Europe itself? Because I think there are some who would say, okay, this is in, the European Union, it's their backyard, they should be stepping up more. Are they? What are you seeing in terms of support from other European nations in terms of this ongoing war, now in its third year?
So this is an incredibly strategic battle for the whole world, for democracies everywhere. So it is about not just the U.S., it's about Europe as well. And I am seeing positive signs that Europe is stepping up more and doing more to fill the void that the U.S. has been expanding in terms of the support. So I am hopeful that Europe will step up more and do more.
Mm-hmm.
Andy, I want to shift just in the last couple of minutes that we have to talking about the business Just Answer and get a business update from you while we have you. I'm curious how you're incorporating AI, something that we're spending a good portion of our lives using and talking about at this point. How are you incorporating it into Just Answer?
Thank you. That's a great question. We love AI. We've been using AI for about 12 years in very important ways. So the way that AI works at Just Answer is that we think about the professional services experience, going to see a doctor or a lawyer or a mechanic or an accountant or a veterinarian, and we essentially took that entire process apart and reassembled it in an AI first way 12 years ago, so that everything in that customer journey, except for the human answer, is automated using AI. The intake, the triage, the follow-ups, so everything you can imagine is automated using AI, except for the human expert answer. And so that's really driven a lot of growth for our business.
Is there a way, though, is there a way to automate that human answer? I think that's sort of the natural next step for your company, is that the answers to the questions exist online in some form already. No?
Sometimes they do, and sometimes they don't. So, as we know, first of all, we have a product, a division called Pearl.com that is giving AI forward answers. So we have a front row seat on that experience as well, and actually giving expert answers via AI. Our system is 22% better than ChatGPT and Google Gemini in the professional services sector, and 41% less wrong. And yet, people still prefer to talk to a human expert for many reasons. First of all, these systems all hallucinate. Ours is better than ChatGPT and Gemini, but it still hallucinates. And that's just a fundamental problem with these foundational models. They make mistakes. And when you're talking about a poem or help me write an email, you know what you're doing, you can deal with that. But when you're talking about a medical issue, a legal issue, right? These things have high consequence, and the quality is critical. And you're even seeing companies getting sued now, Google included, for giving bad advice.
Yeah, that's a good point. Hey, Andy, always good to check in with you. Andy Kurtzig is the founder and CEO at Just Answer. He joins us from the San Francisco Bay Area. Carol, we're seeing some selling into the close.
Yeah, we absolutely are. We are at our lows or near our lows of the session. So what does that mean, folks? That means we are down about 117 points on the S&P 500. That is a 2% decline. The Dow Jones Industrial Average, it is off 744 points, down 1.76%. NASDAQ 100 down 535 points. That is down 2.7%. I've been just popping around to some different averages. If you look at the equal weighted S&P 500 index, it is down 1.6% as well. So we are seeing broad-based selling. The Mag 7, the Bloomberg Mag 7 index, down about 3.5%. And Tim, I've been looking kind of at the week overall. We still have about 27 minutes to go before we wrap up the week. But consumer staples are where you've seen some gains over the last 5 days, up about 1.7%. Energy, we've seen investors moving there, but information technology is down almost 4%. Communication services are down more than 3%. Industrials down about 1.33%. So you've seen quite a risk-off trade, and certainly investors moving into the safer segments of the market this week.
Hey, I'm looking at CoreWeave, that company that IPO'd today. Shares started trading today. I should say they sold the shares yesterday at $40 a share. That was the IPO price. $39 is where it started trading. It was in the red for much of the earlier part of the trade, but now it's pretty much flat, Carol, in the green ever so slightly.
All right, folks, just about 26 minutes to go. We've got 411 names in the S&P 500 losing ground today, 89 holding on to some gains. But again, it's looking like we're going to end near our lows. This is Bloomberg Business Week Daily.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. 20 minutes to go ahead of the closing bell. We are on track for a losing week. The Dow, the S&P, NASDAQ very much in the red right now. In fact, we are close to session lows. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. It's an ugly day to be long stocks amid tariff inflation and consumer sentiment worries. The Dow is currently down 739 points. S&P's drop 118, while NASDAQ is down by 2.9%. The U.S. 10-year yield is at 4.26%. Gold is up 23. Oil is in the red. And Bitcoin, that's down by 4.3%. Among the main 11 S&P sectors, only utilities were in the green. Telecom and consumer discretionary were under pressure. And leaders to the upside in the Dow, Merck and Amgen, while Amazon fell 4.4% and led to the downside. After earnings, Lululemon fell 15%. And regarding IPOs, CoreWeave opened at $39 a share. The IPO was priced at $40. Wrapping things up, Facebook is testing the 200-day moving average right now. It has not closed below the 200-day since January of 2023. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. 19 minutes to go. We got you covered. And to hear live breaking news over your Bloomberg, type SQUAK, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got about 18 minutes to go until we wrap up the trading day on this Friday and wrapping up the week overall. As we've been reminding everybody, you just heard from Bill Maloney and Charlie Pellet. We're pretty much near our lows of this session. We've stayed there really for the last hour, it feels like, that we haven't been able to see any kind of rally potentially into the close here. Still down about 2% on the S&P 500. Dow Jones Industrial Average, a decline of 700, almost 750 points, down almost 1.8%. The tech-heavy NASDAQ 100 down almost 2.8%. That's a decline of almost 550 points. But we are seeing really some broad-based selling. I keep bringing up the equal-weighted index for the S&P 500 just to see where that is. As I mentioned, the S&P down 2.1%. The equal-weighted S&P 500, Tim, still down about 1.6%.
Yeah, I'm taking a look at a deeper dive into the different industry groups. Communication services down 3.9%. Consumer discretionary down 3.6%. The Bloomberg gauge of Mag 7 is underperforming everything right now. It's having its worst day going back to March 10th. This is the Bloomberg Magnificent 7 Total Return Index. It's down 3.7%.
All right, let's see what our next guest has to say a little bit about this market environment. Rob Thummel is Senior Portfolio Manager at Tortoise Capital. It's got $9.6 billion in assets under management. He helps manage the Tortoise Energy Infrastructure Total Return, ticker is TORIX. It has returned more than 38% over the last year, putting it in the 95th percentile among its peers. Go back about 3 years, averaging about 20% per year, putting that in the 69th percentile. He joins us now from Kansas City. Hey, Rob, before we talk energy and other sectors, broad view on today's environment, market environment, and the selling that we continue to see on this Friday.
Yeah, good afternoon, Carol and Tim. Obviously it's been a rough week. Obviously, the tariffs and uncertainty regarding the impact of tariffs on the economy are driving everything. And so that's what we're seeing across the board. I guess the good news is, as an energy investor, and that's what we focus on at Tortoise, the one thing that is certain, we always need more energy in the U.S. and always need more energy in the world. So that's been a good place to be.
Is it concerning at all to you, given that energy prices are volatile in terms of supply and demand? Mainly demand, not just here in the U.S., but also globally, if we could be entering a period of perhaps a recession?
Yeah, Tim, and that's a good question. So energy demand and the economy go hand in hand. So if we do have a recession, energy demand does go down, but it also comes back, and it comes back fairly quickly. So if you go back and look over the last 40 years, global energy demand has risen 38 out of those 40 years. So do we watch it fairly closely? Yes. But when we look at where do investors look to put cash, one of the great things about the energy sector is there's a lot of companies out there like energy infrastructure companies that have fee-based cash flows, and they pay high dividend yields, right, to investors. And that's a good place to be in these uncertain times, because these dividend yields are certain, the cash flows of these companies are certain, and so we like those type of plays in this type of a market environment in the energy sector.
And there are some specific companies, because I do think in an environment like this, there's always buyers and sellers. It's just a matter of price, right? And you do like, and we do see it sometimes an investor at this point saying, well, wait a minute, there's a name I like the fundamentals, I get it. Maybe it's a longer term hold because of the uncertainty in the current environment, but nonetheless, I can maybe get it at a cheaper price in this environment. But let's get to some of your individual picks that you like. Williams Companies is among them. Ticker is WMB. Why this name in particular?
Yeah, no, Carol. So if you think about this from just a big picture perspective, we think that natural gas really, the energy sector is being redefined. We think in the next decade or so, and natural gas will play a really important role. And so all that all ties back to Williams, because Williams is one of the operators of the largest natural gas pipeline networks in the world. So once again, they're one of these companies, pretty high dividend yield, 5% dividend yield. They're going to grow that dividend 4 to 6%, might even be a little bit higher than that out into the future. They're really benefiting from a lot of different things that are going on in the U.S., whether that's exporting of liquefied natural gas out of the U.S., whether that's bringing back manufacturing to the U.S. That's really important. But the big change is AI and the development of electricity demand that's really needed to support the development of AI and all these data centers, and Williams will benefit from that.
How do you look at, and you have a couple more picks, we're going to get to them, but I'm just wondering how you look at renewables and whether or not there is a future in renewables, given what we've seen from the Trump administration.
Sure, Jim. Well, we think there's an all-of-the-above approach that's going to be necessary for energy demand. I think if you just look both domestically and globally, energy demand's going up, and we're going to build a lot of data centers. I know that this data center trade is I guess, being called into question, and maybe some CapEx is going to be a little bit lower, maybe it's going to be a little bit higher down the road. But the big picture is we're going to need a lot more data centers in the U.S. We're probably going to build this equivalent to the strategic data reserve, kind of like we have the strategic petroleum reserve in oil. We'll have the strategic data reserve for technology. That just means you're going to need a lot of electricity, and you know what? You're going to need a lot of energy. And so we're going to need all of the above approach. Renewables will play a role in that, but natural gas will play a really important role, and probably one of the most consequential roles going forward.
Hey, since you are so embedded into the energy space, what is your longer term view on renewables? Is it a rollback? Will we not see the investment? Is it a 180 turn for the United States? Or, the train has already left the station and renewables has to be a part of our energy story going forward and will continue to be maybe even more so?
Yeah, I think well, part of it's the technology. So I do think that the technologies will continue to get better. Obviously, we're looking. The wind energy has struggled offshore for sure, as far as the technology becoming a commercial operation. But wind energy domestically will continue to grow. We think solar energy will continue to grow. Hydrogen will be a little bit tougher. The economics right now are really tough for hydrogen going forward, but carbon capture has the potential as well to really change the game and improve the environment and the environmental circumstances pretty substantially, probably over the next decade.
Okay, we only have about 30 seconds left, but I wanted you to give us just 30 seconds on Energy Transfer, ticker ET.
Yeah, ET. So it's a great company, diversified energy company, almost an 8% dividend yield, going to grow the dividend 3 to 5% a year. It's a classic American entrepreneur story run by an entrepreneur, Kelsey Warren, or founded by Kelsey Warren. It gives you really exposure to energy infrastructure, so fee-based cash flows, and exposure to exporting of crude oil, exporting of natural gas liquids like ethane and propane as well. So it's a great opportunity to get some yield.
20 seconds left here. Are you nervous about this market environment? Are your investors getting nervous, running for the exits?
Not ours, because of the dividend yield that we can provide, right? The energy's underperformed in so many markets, Carol, and as you know, energy's coming back, and actually we're seeing a rotation. There's a rotation out of tech into energy. Energy is one of the best performing sectors in the S&P 500. When we wrap up on Monday, I think it might be the leader, and so as a result of that, we're excited about where the world can go with energy.
All right, have a good weekend, Rob. Thanks for your time today. Rob Thelmel, Senior Portfolio Manager at Tortoise Capital, $9.6 billion in assets under management. Folks, we got 11 minutes left in the session.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we are just under 7 minutes until we wrap up the trading day and the trading week. And as we've been saying, you know, what's interesting is we've been hovering along the bottom here since about, I'm just looking at my Bloomberg, about 1:30. So it's been about 2.5 hours. And we've seen some temps to we bounce off a little bit, we go down again. And it does feel like we've stayed there for a long time and that investors aren't necessarily willing to take another leg down, but not necessarily looking to do a bunch of buying into the close either. So it's an interesting trade. Hey, it's potentially a big week next week in terms of the imposition of tariffs, and that has folks worried, and we don't know if that's the end of it.
I want to draw your attention to the U.S. credit fear gauge. I got this note from Tim Andriacci over on Bloomberg TV, who just sent this note to me. A gauge of credit market fear rose to a fresh 7-month high after economic reports suggested inflation is staying stubbornly high. The spread on the market CDX North American Investment Grade Index jumped as much as 2 basis points, or 2.23 basis points, I should say. It's at 61.4 basis points. The index rises as perceived credit risk climbs, and it reached its highest reading intraday going back to August.
Right, the high yield gauge, which falls as credit risk climbs, declined as much as 0.7 point, also an intraday low since August, excuse me. And, you know, we've really seen risk markets broadly falling in today's session, partly reflecting growing concern about tariffs due to those that are expected to take effect next week. Fed Bank president in Boston, the Boston Fed Bank, I should say, Susan Collins said yesterday that it looks, quote, inevitable that tariffs will boost inflation, at least in the near term. Hey, listen, we heard what Jay Powell say, transitory when it comes to tariffs. But again, we talked to our Mike McKee, who said it's going to be a couple months before we start to see it in data. Sentiment is pretty negative. Folks are freaking out a little bit. And so when that sentiment becomes actions, that's when, again, potentially be problematic.
I'm looking at the yield curve right now, Carol, and we're seeing yields fall across the curve, but really at the 5, 7, and 10-year, down more than 10 basis points there. The 10-year yield down more than 10 basis points to 4.25%.
But we've been lower, right?
We have been lower, yeah.
Michael McKenzie talked about this.
Yeah.
So, you know, watch the credit markets, obviously, right? The spreads have been pretty narrow for a long time, and that's why we've said, like, there hasn't been so much concern. We've talked about liquidity falling off. Jess Metton wrote about it in the equity market this week. Michael McKenzie talked about all these global traders waiting to see the impact of tariffs next week. That means they're kind of waiting to put on trades and maybe waiting for things for some resolution and clarity, but in the meantime, backing off those trades. And so you see reduced liquidity in the markets, and that can be a problem, especially if people start to run for the exits.
Speaking of running for the exits,
yes,
ever so teeny bit of buying. No, I'm not. I'm here. I'm running for the exit at 5:01, but before that, I'm here in this chair. In the next couple of minutes, though, the markets will close here in the U.S. If you're long this market, a painful day. We're not at our worst levels of the day on the S&P 500, but we're still down 1.9%. The Mag 7 Total Return Index, not at its worst levels of the day, but still down about 3.5%.
And we have a VIX at, 21 and change here, folks, up about 3 points here. But it's not like we've seen a VIX go up to 40 at extreme times of volatility. But, definitely picking up today, and definitely much more of a broader based bunch of selling that we're seeing in today's session. So we'll see what happens. But I get it. How many times, we kid a drinking game of every time somebody says uncertainty, but that seems to be the word when it comes to today's environment.
All right, taking a look at the world equity indexes function, 2.64% lower on the NASDAQ composite, 1.9% lower on the S&P 500, and the Dow down 1.6%.
Exactly. We're going to get into some of the gainers, though, and decliners in just a moment with our TV colleagues. There are a few. As we say in every market, there's a buyer and seller, but again, it's just whether there are more of determines where we are overall in the major indices. So do not go anywhere. Just a reminder, 1.9% down on the S&P 500. As Tim mentioned, we have been lower, 1.6% lower on the Dow Jones Industrial Average, and the NASDAQ 100 down about 2.5%, the biggest hit on a percentage basis. Over to our TV colleagues. Closing bell starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Seal taking you to the closing bell. It's a global simulcast. It starts right now. Carol Masser and Tim Stenovic join us from the radio booth. Scarlett Fu on assignment for the day, and she's missing out. A huge downdraft in stocks here, the third broadest base sell-off that we've seen in the S&P, Carol, all year long.
Yeah, that's what I think is so notable, right? You know, often we've seen a split in the S&P 500 on a day of selling, but this is pretty broad-based. And if you look, it's been about 2.5 hours that we continue to see these major equity averages kind of hover along the bottom, try to rally, and kind of can't get there. So, yeah, it's pretty depressed going into the weekend.
Not a good day to debut a public company. I'm watching what's happening with CoreWeave, sort of serving as this bellwether to other companies that are on the sidelines. And it's flat right now, but a pretty disappointing showing for the company.
And really the question then becomes, guys, as you see the VIX tick up as well, is will that Wednesday be the clearing event for equities? And do we all breathe a sigh of relief? There are indications that the options market's kind of ignoring Wednesday to some extent and focusing more on Jobs Friday.
Yeah, absolutely here. You did see some elevation in the VIX right now, camped out just below 22. And we were speaking with the global president of SIBO earlier. He talked a lot about the complexion of the market, and you can just pull it up on your Bloomberg terminal here. You look at that put-call ratio. We're not really seeing panic. People are hedging, certainly, but not to any extreme that we've seen in other downdrafts in this market. It is red across the screen. You pick an index, most likely it was down. Probably the only saving graces you're going to find in the utility space, in the pharmaceutical space, and to a smaller extent, real estate. The Dow Jones Industrial Average losing more than 700 points on the day, or about 1.7%. The S&P 500 down more than 100 points, or about 2% on the day as we wait for these numbers to settle. 55.80 and change is roughly about where it's going to end the day. The NASDAQ Composite down almost 500 points, or 2.7%. Similar decline for the NASDAQ 100. The Russell 2000 is going to close out the day lower by 2%. All the major indices lower on the week.
All right, and just digging a little bit deeper, as we've been talking about in the S&P 500 here on this Friday, 411 names in the S&P 500 lower today, guys. 92 actually gaining ground, but again, as we've been talking about, pretty broad-based in terms of selling on this Friday.
And when you take a look at the eye map of the 11 S&P sectors on the day, only one of those sectors was in the green. Utilities posting up a gain of about 0.8% here on the day. Everything else was lower, and that includes some big downdrafts on the day and on the week. For a weekly basis, the one sector that dragged everything down, you can guess, that's tech. Tech sector down 3.6%. Communication services, which is basically tech as well, down 3.2%.
All right, a lot of red across the screen, which made it a little bit tricky when I was picking out some gainers. So lucky they actually stayed in the green. So AppLovin, this was a name Tim talked about yesterday. We saw about a 20% decline in the Thursday trade. Investors moved back into it at its highs, up more than 9%, finishing the day with a 4% gain. It was a top gainer in the NASDAQ 100, and I think the S&P 500, actually the NASDAQ 100 in today's session. We did see multiple analysts coming out defending the company following yet another short report from Muddy Waters. So again, that was an outperformer in today's session, a little bit of a bounce back. Rocket Lab, this one at its highs up about 7.5%, holding on to about a 1% gain here at the close. This is after the company was selected by the U.S. Space Force for a $5.6 billion program. Citi analysts said that was positive for the stock, no surprise. Again, so this was selected for its national security space launch Phase 3 Lane 1 program, the company putting that out in a statement. I should point out, stock down about 25% year to date, and about 13% of the company is shorted in terms of the float. W.R. Berkley, also an outperformer, up about 7.5%, but at its highs today up more than 15%, so about having that gain, but still finishing in the green. This one on news that Mitsui Sumitomo Insurance will buy about a 15% equity stake in the U.S. insurer. This one, by the way, it's a $27 billion market cap company, not something that we talk about a lot, but nonetheless W.R. Berkley an outperformer in today's session, Tim?
You had the hard job today finding the outperformers. I had the easy job. I'm going to go with just mega cap tech today for my first decliner on the day today. The Bloomberg Magnificent 7 falling 3.5% today. Everything in there was lower. Alphabet, Amazon, Meta Platforms, NVIDIA, Apple, Microsoft, and Tesla all lower on the day. Let's also look at shares of Lulu, falling today by more than 14%. This after the company delivered a disappointing outlook for the year, citing concerns about consumer spending in the U.S. amid geopolitical worries and high inflation. Shares falling by more than 14% today. And finally, shares of Wolfspeed absolutely cratering today, falling about 52%. The company is struggling to reach a deal with investors to refi its $575 million in convertible bonds that are due next year. The company's been working with JPMorgan Chase on the refi effort. That's according to people with knowledge of the matter who asked not to be identified, discussing private talks. It's a chip maker, once again down about 52% today.
All right, guys, I'm taking a look at yields. And where do you go if you're nervous, you're scared? Well, you go into the bond market. And we saw that in full swing pretty much all across the curve, the belly and the back end in particular, seeing yields lower by about 10 basis points. At its lowest level, you had the 10-year yield hitting a mid-January low. For perspective, though, guys, if I take a look at the quarterly move in the bond market for the 10-year, for example, we're down 31 basis points for the quarter. So it's quite interesting. On a weekly basis, we're kind of flat. Monthly basis, we're up a little bit. Quarterly basis, down 31 basis points. One other point to note, guys, we were talking about this earlier with the credit stress. So the market CDX, North American Investment Grade Index, that actually jumped. So we're starting to see that corporate bond spread widen out a little bit as the day continued.
And this gets us to the question of kind of where these catalysts are going to be to move this market in theory higher, whether it does become, I don't know, that April 2nd event. That is Wednesday, and we had Julian Emanuel on the program earlier, guys, who talked about this idea that in his view, he does think that could be a market clearing event, meaning the uncertainty now becomes certainty and you can trade around it. You also have earnings next week out of RH, and on Friday, you have that big jobless report, that monthly jobs report is what I'm trying to say, guys.
Easy. Well said.
Yeah,
well said.
So
okay.
Hopefully it will contain
Maybe we're
jobs.
looking for some jobless
It'll be job
stuff.
full. How about that?
Hey, listen, there's a lot going on and a lot to keep track of. I think it's interesting what he has to say. And yeah, if the uncertainty is truly taken out, but if I don't know, 24 hours later after that happens, the president comes out and introduces something new or says, maybe I'll roll back. Like, I think that's the hard environment for folks who've got to put money to work, or if you're running a company at this point, to make decisions.
Okay, so right now on the S&P 500, we closed at 5580 today. That's basically higher than where we closed a little earlier in the month. If you go back to March 13th, 5521 was the low. We'll see what happens next week, but I think people would be concerned if we start to reach new lows in this session.
Back below our 200-day, too, though, right, in the S&P.
But do we get by the dips? That's the question. So JPMorgan Market Intelligence this morning said that retail was still buying the dip in some of the Mag 7 stocks, not in the same way that it might have done during other sell-offs, but they did buy Tesla, they did buy NVIDIA, and some increased interest in Amazon. So there is still that there within the market.
Yeah, but it's interesting, too. I mean, I was looking at the CFTC data that came out today, and obviously this only goes through Tuesday, so it doesn't really reflect any of the sentiment for the last 3 sessions here, but you are seeing a lot of folks betting on a weaker dollar. You are seeing folks pull some chips off the table when it comes to their bets for a higher market. And we remember we came into this week with several key Wall Street strategists lowering their outlook for the S&P 500, including HSBC and a few others.
That's good. I want people to be more negative. Can I say that? Am I allowed to do
No, you can't.
Oops, I said it. No, but I do.
That goes against the code.
Okay, well, I broke the code.
Why so negative, Carol?
No, but I just think when everybody's so upbeat, it makes me always so nervous. And I think, you know, realistically, there are some real challenges out there. And I think especially when you, again, get stuff from D.C. where you're not quite sure, okay, is this it? Can we kind of make decisions based off of it?
But I think that's what the really challenging part is, as we talked about yesterday. Liberation Day next week, as the president has been calling it. What happens on, you know, April 2nd when he announces the details on these tariffs? Because what we've seen over the last couple of months is he's changed his mind pretty frequently. And if world leaders say something to him, made comments about the border, for example, what they're doing in Canada versus what they're doing in Mexico. He could go back on it.
And we should point out, too, I mean, the uncertainty isn't just around Trump himself. We're still waiting to hear what Canada's retaliation is going to look like, what Mexico, if they're going to do anything. And then, of course, there's still the elephants in the room when it comes to China and Europe. And I think that could have a more outsized effect. We might get certainty here. Are we going to have certainty on the other side of the border?
Hey, guys, it can't be all bad because Scarlett Johansson and Colin Jost apparently just bought a Manhattan penthouse for $13 million.
Where? Let's go visit.
Park Avenue.
Oh, very fancy. I was kind of hoping Brooklyn, but that's cool.
I needed a little something. I'm just saying.
See, they found real estate, Romaine. It's very close for you now.
They're incredibly wealthy. So I assume they don't have a 7% mortgage.
I'm assuming so. All right, guys, have a good and safe weekend. We'll see you next week. That's a wrap. Across platform, radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We will see you again, same time, same place, on Monday. Look at those attractive people.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Carol, how much was that Scarlett Johansson, Colin Jost apartment?
$13 million, Manhattan's Park Avenue. I'm looking to see which one.
It's a Wall Street Journal story, right?
Yeah.
Okay.
Forgive me, I didn't give credit, but now we did. Yeah, it looks like it's a pre-war.
Okay, they're this power couple, right?
Less than half its original asking price.
They're this celebrity power couple.
They are.
They've made money in entertainment.
Yeah.
Pales in comparison to the money being made in AI right now.
Pennies.
Pennies.
Yeah.
The sums of money that the AI boom has created in the span of a few years has been borderline unthinkable. OpenAI is poised to become one of the world's most valuable startups. $300 billion could be the valuation.
That's real money.
Anthropic, that was just created back in 2021 by a team of former OpenAI employees. That's now worth more than $60 billion.
Not like you know anybody or anything, right?
I mean, I don't. True story. I read in a Bloomberg story that one of the co-founders of Anthropic is a former Bloomberg News reporter.
Interesting, right?
So there's a future for us, Carol.
There is a future.
There's a future for us.
We too can be an AI billionaire.
Check this one out. Safe Superintelligence. It was only launched a few months ago. $32 billion is the valuation.
Holy moly.
So Tom Maloney writes about the new billionaires of the AI boom. He's an editor at Bloomberg News. He joins us from New York. Tom, as you write in the piece, Silicon Valley is kind of used to booms, some busts as well. This one's on an entirely different level, though.
Yeah, absolutely. We used the occasion of CoreWeave's IPO to take a look at who in the AI world was getting rich on some of these sky-high valuations that you just mentioned. And we identified 29 founders across 8 companies who have or are poised to have a stake worth 71 billion collectively. So just enormous amounts of money that are being minted in this industry right now.
Were you surprised in putting this list together? Because, I mean, there's some that we talk about a lot, right,
There's
in the AI
someone
world.
here that I'd never heard of. I'm just going to admit it.
I mean, like, as you were putting this together, you were like, oh, my God, oh, my God, oh, my God. I mean, this is serious, valuations and wealth.
Absolutely. Look, I'd never heard of the majority of the companies that we're looking at here. I mean, OpenAI is not on the list. They've got a really kind of opaque structure. That's a 300 billion company. They're not there at all. There's a lot of OpenAI alum, though, who are. So one of the companies, Safe Superintelligence, started less than a year ago by an OpenAI alum. 3 founders, 32 billion valuation already. Another one, Thinking Machine Labs, that's looking at they're trying to get a 9 billion valuation, raising 1 billion. They were only started this year. So just, crazy numbers.
Okay, so some of these companies, in terms of, I mean, I know the article doesn't really dive into the, profitability or lack thereof of these companies. A lot of these or all of them are based, except for CoreWeave now, that's a public company, but they're really all based on private market valuations. I want to talk about some of the individuals in this story, because what you've done is you've not just included the valuation of the company, but you've also included the average founder stake, which I think is fascinating. The more founders, the more diluted that stake is. Also depends on how much money they've raised. Figure AI is a company that really grabs my attention. This is one that has been on my radar for a couple of years. Brett Adcock is pretty active on Twitter. I think I follow him, so I've seen him there. But also, it has some big investors. OpenAI is an investor, which is kind of funny because they're also considered, you know, a quote-unquote venture capital-backed startup. Bezos is an investor. Microsoft is an investor. But they make these humanoid robots that are supposed to help around warehouses and stuff, and they kind of look like people or can do what people can do. What can you tell us about the numbers behind Figure AI?
This one was really interesting. You mentioned Brett Adcock. This is his third startup, actually. He had another one that went public in 2021, Archer Aviation, which was making electric planes. So he's a bit of a serial founder, but they are apparently raising money at a $39.5 billion valuation. He owns a little under half of it, we calculate. So, you know, look, he's poised to have a stake that's going to be worth, you have the number in front of you, I think.
$16.6 billion.
Yeah, exactly. So, I mean, again, pretty surprising. And they raised money February last year, and I think at a $2.5 billion valuation. So, I mean, that's just gone crazy in 12 months.
You know, it's also crazy, and you point this out, and I mean, the names alone and stuff are interesting, but as they continue to do these funding rounds, right, this wealth's going to grow, and then there's going to be even more people on this list as well, right? As if we assume that this AI craze continues, right, there'll be even a lot more people wealthier than even the numbers you have here, and then there'll be more people on this list as well.
That's right. And one thing we didn't dive into too much on this list is, you know, there's a lot of employees at these companies who have big stakes in these firms as well. I mean, not billionaire stakes, but certainly millionaire several times over. You know, most of these companies allocate 10 to 25% of their equity to their other employees, who might be a couple of hundred people, it might be maybe 1,000 people. But that's a big number. That's still life-changing money for these people. So there's a lot of money, you know, sort of swashing around Silicon Valley at the moment from these kind of valuations.
One thing that's wild to me, and I kind of mentioned this in the intro, is Safe Superintelligence. This is a company that was founded just a few months ago, so October, right? November, December, January, February, March. 5 months ago, it's already worth more than $6 billion. And I think one of the reasons, Tom, is because of who's actually involved in this company.
I mean, again, it's the OpenAI alum. It's not the only one, you know, Thinking Machines Labs, but that pedigree at the moment is enough, I think, to get you these billion-dollar checks if you're looking to raise money in AI.
Yeah, you've heard of the PayPal mafia. I feel like there's this OpenAI mafia now. Right? This is Ilya Sutskever. He was the chief scientist over at OpenAI. He left back in May following the dispute with Sam Altman. And now he announced his latest venture a few months ago. Co-founders Danielle Levy, another OpenAI veteran, Daniel Gross, a former Apple AI lead and investor, Safe Superintelligence. There's no revenue. It doesn't plan on selling AI products in the near future. Sutskever told Bloomberg in June that its first product will be the Safe Superintelligence, and it will not do anything else up until then. It's incredible.
You know what's amazing, too, is I feel like Tim and I were talking about this a little bit with CoreWeave, and I guess it's safe to say, but it feels very incestuous in terms of, you know, there are these AI companies, and they're founded by other big AI players, and then they're buying from other AI companies, like CoreWeave itself, right? It's NVIDIA-backed. It buys a bunch of NVIDIA chips. Its big customers are, you know, Microsoft and another big tech companies. You've got another one on your list, Scale AI, OpenAI, Meta, Microsoft, among its customers. It's just amazing. I don't know. I'm not going to say it's a closed loop, but it's just they're all kind of in each other's business, it feels like.
That definitely comes through.
All right. Is there a takeaway other than...
You should have gone and worked in AI? That's the takeaway. What's your takeaway, Tom? You read about money, wealth, the ups and downs.
Like, what are we doing? What are we doing here? No, just kidding.
Yeah. You know, look, I think one thing that is interesting here as well is these companies need to raise a lot of money because we know that building AI models is really expensive. It takes a lot of resources. It takes a lot of power. It takes a lot of hardware. And you have to raise this huge amount of money. So that kind of necessitates these big valuations. And, you know, it's a lot of people making these big bets, and obviously not all of these companies are going to win out. I would say most of them are not going to win out. Most of them are going to go to zero. So it's going to be fascinating to watch who kind of comes away and what these companies actually end up being worth.
Wait, was that enjoy your paper wealth now? Is that what that was, the takeaway? No, but it's fascinating, right? And this is why people think about, you know, the dot-com boom when there was just so much money floating around a lot of companies and a lot of companies that never survived. Tom, thank you so much. So glad we could check in with you. Tom Maloney, editor at Bloomberg News, joining us in New York City. Hey, folks, if you're just joining us, missed the close, just a reminder, we did finish near our lows of the session, down almost 2% on the S&P 500, down 1.7% on the Dow Jones Industrial Average, and the NASDAQ 100, a decline of 2.6%. Investors really getting ready for the big imposition of tariffs next week.
Perhaps that's a good segue to talk about Unruly. That's next.
I like
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. A down week, a stock market rout today. And this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. The offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Stocks fell sharply today with the Dow, the S&P, NASDAQ all declining. A lot of concerns about the economy, a lot of concerns about tariffs. Bottom line, red on the screen, down week as well. S&P down today, close to session lows, down 2%. Finishing the week, heading into the weekend at 5580, a drop today of 112 points. The Dow down 715, down 1.7%. NASDAQ down 481, a drop there of 2.7%. 10-year 4.24%, the 2-year 3.90%. Gold at a record $3,082 on the precious metal, up $25 the ounce, up 0.8%. West Texas Intermediate crude down 1.1%, $69.17 a barrel, and Bitcoin down 3.9%, $83,925 on Bitcoin. Secretary of Health and Human Services Robert F. Kennedy Jr. joined West Virginia's Governor Patrick Morrisey today in declaring the latest front in their war on unhealthy foods. Morrisey has announced that he will stop the U.S. Department of Agriculture, will ask the U.S. Department of Agriculture to stop allowing West Virginia residents to buy soda through government-funded food programs. And Charlie Javis found guilty of defrauding J.P. Morgan Chase. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. We are a bit over 2 months into the new administration. A lot of conventional norms have already been upended. No question we're seeing a test of the president's powers as he works to slash the size of the federal government, change immigration policy, some of which, such as birthright citizenship, is actually enshrined in the Constitution, go after critics and the media, and upend the U.S.'s relationship with not only its largest trading partners, but also some of its longtime allies. Our next guest argues that the world we find ourselves in is, in quote, unruly. Sean West is the co-founder of Hens Technologies. It uses AI to help companies protect themselves from risks. He's also the former global deputy CEO of the political risk consultancy Eurasia Group. He's got a new book out. It's called Unruly, Fighting Back When Politics, AI, and Law Upend the Rules of Business. He joins us from Los Angeles. Sean, good to see you. My introduction has to do with the last couple of months, but you wrote this before you knew that the president would come into office and do what he's been doing. You argue that we've been sort of in this unruly world for quite a while. What exactly does it mean?
Well, thanks for having me on. Yeah, so I put my pencil down November 15th on this book. So I had about 10 days to update for the fact that Trump was taking over the White House and to really think through how the broader trends I was writing about were going to extend into the new administration. Now, I've been a political forecaster for nearly 20 years, so that's a normal day for me to try and think about what it really means. But you know, the book Unruly is a play on the word because unruly means disorderly. Certainly the world is volatile, but also we are witnessing a world that's been quote unquote unruling, as I call it, where the rules of globalization have been eroding, where the rule of law has become a question mark in more places than it's become a certainty. And that's not just about the Trump administration. That's been in play over the last 4 years in the United States, but it's also been in play globally. And so what I try and do in the book really is say that what's happening is it's not enough to just say that we live in a politically volatile world. We need to recognize that the law is changing and technology is changing at the same time. And those three factors changing all at once is creating a significant unruliness, a really difficult situation for investors and firms to navigate.
By the way, I'm not making a judgment call as to what has happened in the last couple of months. There are many Americans, I think it's fair to say the majority, or not the majority, but, you know, of the those who voted, who did vote for this president and what we're actually seeing come from him. I think it's important to note, Sean, outside of the U.S., where do you think this is happening?
Well, if you look across the 74 elections that happened in 2024, we saw a number of them where it wasn't clear that the elections were free and fair. You could look at something like Venezuela and draw a conclusion about the election that happened in 2024. You can identify a number of countries. I mean, Hungary is a great example where the courts are effectively under the control of political leadership, right? And so you've had this trend and a real erosion in the rule of law. The World Justice Project has talked about how for the 7th straight year, more than half the countries in the world have seen an erosion in rule of law rather than an increase in rule of law. And so that's the backdrop against which we live in. We live in a world where the rules of the game are not clear. Think about it from an international law perspective. The US or any number of other countries puts tariffs on each other. That would typically go through the WTO, and there's a little bit of going through the motions, but the idea that it's against your legal commitments is certainly not constraining political actors. We've seen this in the rules of war as well, right? I mean, Israel exploding walkie-talkies and exploding pagers may or may not be a good military tactic, may or may not be justified politically, depending on your point of view. But from the perspective of law, you're not allowed to explode civilian devices, right? So there's this concept that I'm trying to drive home in the book that the rules of globalization, where the world was sort of converging towards a single set of global values or Western values masquerading at global values, is no longer what's guiding us. We're now living in a world where countries and blocks of countries are going their own way, not just in the rules that they put in place, but in how they interpret the way they need to deal with other countries.
Is it possible that the reason there is this pushback against global values is because the rule of law doesn't work equally for everyone?
For sure. So I think, if you look at the global population, like 2/3 of the humans in the world have never had access to justice, right? And we're seeing there's a trend against that, as I highlighted with this rule of law erosion. But the reality is that, of course, moneyed interests and folks who can afford the best legal advice have always done better in courts than those that can't. What I think is interesting and what I get at in the book that's really a core thesis is technology is coming through to change all of that. So in the book, I go through a number of different examples of where I use technology. I use AI to fight legal battles for me, where before I might not have wanted to spend the money on legal representation. I might not have had the money to spend it. I can now use AI to fight that battle. So we're going to be living in a world where citizens who have been disenfranchised or who are realizing that the rule of law is eroding also now are equipped to take the law into their own hands. And that's a particularly risky environment.
Well, why do you it's kind of amazing. What's your take? You've certainly at Eurasia Group, consulted a lot of companies and executives. And it is interesting to see in an environment that some would say that it's like the wild, wild west all of a sudden, certainly here in the United States, where there isn't executives speaking up and saying, well, wait a minute, we are a country where rule of law means something. And why isn't there the speaking out? And I mean, I know maybe I'm asking like naively, let's get this out. But I mean, because we have seen pushback certainly from the administration, but I'm just curious, why do you think the corporate community isn't standing up and speaking?
So I think there are two reasons why they're not speaking up. Number one, most of them are scared. They're running scared, and they're also afraid if they speak up against some issues and for some issues, even the things that they're supporting that are aligned with the president may no longer be aligned with the president in a month or two. So I think there's a little bit of a fear that the policy volatility is too great to even know where your position is. But I also think we need to remember it's early days, right? We're only a couple months into this administration, and I think the corporate community had been under the assumption that Trump was bluffing about these tariffs, right? The markets were priced for a bluff, and CEOs' supply chains were designed as if the president wasn't serious. So there's a lot of digestion about how the president is serious about delivering his promises. I think when we start to see pressure on free speech through the newspapers, when we start to see pressure on the legal system, on courts, on law firms, et cetera, I think it takes time for that to filter back through to the corporate community to speak up. I would expect to see more vocal CEOs in the second and third quarter of this year because none of them signed up for a recession, right? They signed up They signed up to look away on a lot of the culture war issues that they may or may not agree with in order to get lower taxes and deregulation. They didn't sign up for a recession.
They're not necessarily looking away. They're sort of embracing some of that culture war when it comes to the anti-DEI stuff and the way that companies have really shifted how they're looking at that within their own companies.
I think they're certainly taking the opportunity to simplify their business by removing a lot of this. You know, many of these CEOs spoke out about how DEI was a secret weapon that would help them be more competitive. And I don't think the MBA studies that they commissioned suddenly changed between January 19th and January 21st. I think that they decided there was a political wind toward going in one direction. They had no choice. But also, I think for a lot of them, it's easier to manage a business when you're less constrained. So I agree with that. So, you know, you're right to say it's not necessarily that they're looking away from the culture wars because they dislike them. It's that they're not interested in the culture war. They're interested in making money.
But they did look at the culture wars during George Floyd and right after the murder of George Floyd. Like, they were all in. I mean, we talked to so many of them after, you know, during COVID. I mean, they were so accessible and they did speak out. And I think a lot of it had to do with their employee base speaking out. So it's kind of interesting.
Yeah, look, I think it's a sea change, right? Everybody looked at it. After George Floyd, they reflected on their own business practices and decided they could do better, and they said as much, and they felt pressured to do that. I think they're now going with the political wind that says that a majority of the population doesn't want to see that, and so you could ask if they were being opportunistic then and being opportunistic now. Maybe that's what you want as a shareholder in your company, to be able to maneuver with the political winds. But we're coming out of an era where there had been an emphasis on businesses articulating values, and we're certainly not hearing a lot about values. We're hearing now about value and shareholder value. So that's a reversion to the mean of the post-war era, I would say.
So it raises the question about what are businesses to do over the next couple of years. Is this a permanent shift in the way business leaders have? Is this a permanent shift in the environment and just a total fundamental upending of the liberal world order that we grew up with, that we were so used to? Or is this a blip and things go back to the way we thought they were?
This is a shift to a new normal. This is not a blip. Trump's first term was a blip. The world decided foreign countries decided to wait him out. And, you know, they didn't really engage on fighting back. We're now seeing Canada talk about how the relationship with the U.S. will never go back to normal. What we're seeing is a fundamental change in the U.S. government. I write about this in Unruly that the majority of America that voted for Donald Trump wanted a question answered about the size and the role of the U.S. government. And the administration's answering that, right? It's removing programs that took decades to build, perfect, and attract talent for, and you can't put that back together. There's no pendulum swinging back to put U.S. aid and U.S. soft power back together in 2 years if Congress flips, or in 4 years if the presidency flips. That's gone. And it's very hard to spend money in this environment on things like that. So, you know, from my point of view, we've shifted to a new normal. It's a new normal that a majority of Americans are in support of, or believe they were in support of generally, and we'll have to see if they, like the extensions of it and the way it's manifested. That's a new environment for CEOs. That's an environment where, frankly, American CEOs are talking to foreign customers and foreign partners who are worried that the U.S. policy environment will make them not be able to fulfill their commitments, right? We typically think about emerging markets that way. Should I do business with X company from X country because the rules and laws might change? Everything is changing so fast in the U.S. Companies are facing that challenge.
Well, what's interesting, and we're going to talk a little bit about the markets and how we wrapped up today and really for the week overall, we're seeing pressure certainly on equities, right? We've seen 10% corrections, and so, you know, on the major averages. And so you do wonder whether or not investors, CEOs kind of rethink this, is certainly because a lot of this is happening based on the policy out of DC. All right, Sean, thank you so much. Sean West is co-founder of Hens Technologies. He is former global deputy CEO of Eurasia Group, and his book that is out, it is entitled Unruly: Fighting Back When Politics, AI, and Law Upend the Rules of Business. Sean, thanks so much.
Hey, let's get back to the sell-off today. Second worst day for stocks so far this year. The S&P 500 fell almost 2%. The NASDAQ composite down 2.7%, while the Dow fell 1.7%. I want to bring right now in a Bloomberg News U.S. stock market reporter, Natalia Kanijevic. She joins us here in the Bloomberg Interactive Brokers studio. Natalia, good to see you on a day when, if you're long this market, could be a little painful. Very broad-based, the sell-off today.
Exactly. As one source told me, it's so hard to find a bullish argument right now. Of course, we did see a lot of anxiety even before today. Today we got this weaker economic data. It all kind of acted like a snowball. In terms of some specific price action that we saw today, which potentially also fueled this stock sell-off, we did see a lot of selling across leveraged ETFs. The reason why it's important, because 80% of those holdings are, of course, across Max 7 stocks. Then in the options market, we did see some single stock volatility. The reason why it's important, if you guys look at the VIX index, it's still at 21. It's not dramatically high, but we do see a lot of single stock volatility, and this can also kind of attribute to this sell-off. What options traders told us today, we see a lot of bullish call options selling and buying bearish put options specifically on big tech stocks. It's not unusual, but today they say it's a really big tape, and this can also be one of the drivers. And yeah, the sell-off is really bad.
How much in terms of your coverage today did people kind of bring up uncertainty, tariffs next week? How much of it was based around that or something, I don't know, longer-term concerns, maybe fundamentally?
Yeah, of course, it is a big concern. But I also would like to point out, since I like positioning, now it doesn't look like it favors the stock market. Fundamentals matter, of course, but when fundamental negative news come at a time when positioning is on the downside, it accelerates. So this is why we see like sell-off after sell-off. And in terms of positioning, so for example, those so-called systematic funds. So there's like a super fast money funds. They don't care about fundamentals. They just follow the market direction. And according to some Goldman Sachs data, we expected that those systematic funds would be selling stocks. So this is also one of the drivers. Overall sentiment.
So they were selling stocks
They were selling stocks like during the whole week, and this is why we do see this pressure, and sentiment is really bad.
So it raises the question about potential catalysts for the next move, and obviously we don't know which way, but we have payrolls coming up for the month of March. We also have earnings season starting just in a few weeks. We'll start hearing from the big banks soon. What's a bigger deal?
I would say any clarity on the market. And one good
Maybe we'll get that next week with tariffs on
Exactly.
what the president calls Liberation Day. Maybe.
Yeah. And one good example of that was last week, for example, we saw that hedge funds bought names across cyclical stocks, which is very unusual because cyclical stocks suffer the most during the economic downturns. But last week, sentiment was, at least it was, that Donald Trump will be more targeted with tariffs. It means that some sectors, let's say financials, energy, are not going to suffer that much. That was the perception based on conversations with sources I had. So that is why any clarity could be a catalyst. And again, as some stocks or sectors reach oversold levels, it can be a good buying opportunity. And we know that retail traders show up every time to buy the dip in favorite names.
Right. We've seen that certainly in a name like Tesla and a few others that they come into the market. Yeah, it'll be interesting to see kind of how we play out next week between tariffs, the jobs market, whether or not investors start to see this as a buying opportunity. What's interesting is we're working our way back to the lows that we had back in mid-March, so earlier this month. And so we'll see whether or not that bottoms out or whether the trend, the selling continues.
Yeah, and if we go below that, I believe it's 55.20 around there on the S&P 500, then we're below that low that we saw earlier this month.
Yeah.
And we go back to kind of the lows of continue to be pre-election, like September.
Yeah, we'll see. Natalia, thank you so much. Really appreciate it. Natalia Kanijevic, of course, she's Bloomberg News U.S. stock market reporter, watching all the trends and going into the options market, which is really kind of cool, right, and telling.
Check out that VIX. She reminds us always to check out the VIX.
Hey,
let's check out Charlie Pellet. He's got an update on everything happening after hours. Hey there, Charlie.
Well, hello there. Let's begin with the numbers today. The Dow, the S&P, NASDAQ, as we recap, reset here. What a day. In fact, this was the second worst day of the trading year. The Dow, the S&P, NASDAQ all ending the session in the red. A 112-point drop today for the S&P 500 index, down 2%. The Dow down 715, down 1.7%. 2.7%. NASDAQ Composite Index down 481. For NASDAQ, a decline today of 2.7%. The 10-year, 4.25% with the 2-year, 3.90%. Gold up $25 the ounce. We're looking at a record there at 3,082 on the precious metal, up 0.8%. West Texas Intermediate crude down 1.2%, 69.11 a barrel, and Bitcoin down 3.8%, 83,986 on a Bitcoin. Rob Thummel is Senior Portfolio Manager at Tortoise Capital, which makes energy investments, and he was a guest today right here on Bloomberg Business Week Daily.
Obviously, it's been a rough week. Obviously, tariffs and uncertainty regarding the impact of tariffs on the economy are driving everything. And so that's what we're seeing across the board.
This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. So again, recapping, stocks lower, S&P today ending the week at 5580, down by 2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. A biography about Dali, not Salvatore Dali. A John Lennon and Yoko Ono documentary, art exhibitions featuring the work of David Hockney, and performances by Gary Oldman and George Clooney.
Oh, wait, did somebody say George Clooney?
Yes.
I know.
George, did any of you guys watch BoJack Horseman?
No.
Okay. All right. I know Elizabeth did. You'll get it if you watched BoJack Horseman. These are just some of the best cultural fare this month, which is not BoJack Horseman because that's an old show on Netflix. We're not talking about it. We're talking about
Stuff Now.
Stuff Now. And for that, we go to Bloomberg Business Week arts columnist James Tarmy. He's got the enviable job of picking and choosing which movies, TV shows, theater, books, and more to feature for the month of April. What,
Do you
Carol Massey? What?
all of this? Read all of this?
Yes, actually, I do.
Wow.
I mean, it's in the job title.
I'm so impressed.
Well,
do you just sit at your
don't
desk
be
and,
that.
do you sit at your desk and read a book?
No, I don't. It's not a good look to sit at your
That's
desk and
why
read
I'm
a
asking.
book. It's after hours activity.
We
but
watch
honestly,
videos at our desk. Nobody says anything.
Well,
Just
you know,
telling you.
maybe someone says something and you haven't heard it.
That's, I think, is the correct answer.
Listen, all I'm saying is it's not working in a coal mine, so I wouldn't exactly describe this as I wouldn't over-valorize what I do. Let's put it that way.
Okay, where do you want to start? Do you want to start with something you watch, something you go see, or something you read?
Well, I have to say that the thing that I am most excited about is something that I haven't seen, making a liar of myself, because it has yet to open. There is a David Hockney massive exhibition of David Hockney in Paris at the Fondation de l'Audiovisuel.
You got to go.
There, I do indeed.
Do you just want to go to Paris?
Well, the two things are not mutually exclusive.
Fair.
But I would really like to go to Paris to see this. It's over 400 artworks. It is called, the title of it is David Hockney 25, but it's also a historical show, but it really emphasizes the work that he's been doing in the last 25 years. It's almost certainly going to be the most important David Hockney show to ever be put on during the artist's lifetime. He's not a young person, and we're likely not going to see something like this happen anytime soon.
Yeah.
It's very impressive. But then there's a lot of other things where you don't have to travel to Paris, even if you would like to travel to Paris.
I would.
But there's something equally as difficult to get tickets for, I think.
Honestly, I think I put two things. It was sort of perverse of me to put the two most impossible shows to see.
Can I tell you something? It's really annoying to live in New York.
I know.
And then to also get constant reminders of how good cultural events are and then not be able to get tickets for them because they're like $800 for a
Or
seat.
have relatives come from out of town.
And they're like, I want to go see this.
Did you see this? And I'm like, no, because I have a mortgage to pay. Like, it's like crazy.
Honestly, I suggest you move into a studio rental. And go see all the culture.
Or do what I used to do when I didn't have kids, which was like go line up to try to get the lottery tickets. Guess how many times I was able to get tickets?
A lot?
None. It was the biggest waste of time ever.
Well, isn't there a thing too? You used to be able to do like the day of or night of and like do standing room?
Well, I think it depends on the theater. Certainly at the opera you can do, there's standing in the back, but I think it's case by case.
We're talking about Good Night and Good Luck, by
We're
the way.
talking about Good Night and Good Luck, which is almost a word-for-word recreation of the 2005
Saw that one
movie.
Yep.
Good movie.
Great movie.
Yes.
Great movie.
And so Clooney has adapted it for stage, and he is apparently fantastic. Apparently, to the extent that it is the hardest ticket to get in New York City right now. Prices are selling for catastrophic sums in terms of resale. It is very, 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 very popular. But there's something else to do in New York City that costs a lot less.
But he plays Edward R. Murrow this time around, which he
Yes,
didn't
correct.
in the film. Okay, now what else can we do?
The thing that is not on this list, but which I have also written about, is the Frick collection is reopening. And it is reopening after a very, very long...
There could be a movie about the...
Well, yes, there was a lot of back and forth. I mean, so for people who are listening who are not familiar with this, the Frick Collection is this historic Gilded Age mansion on Fifth Avenue that was built and resided in by Henry Clay Frick, who is an investor and also, less popularly, a major inventor of different ways of distributing coke, the byproduct of coal. Anyway, so he was a very rich man, and he bought a ton of absolutely spectacular art. The Frick collection has 3 Vermeers, for instance. I mean, the Goyas, the Manets, they have an incredible collection. But the mansion that was turned into a museum was this jewel box, right? You walk in and you feel like you're in this kind of special other time. And so when the Frick announced way back in 2014 that they wanted to do an expansion, not of the museum itself, but everything around it.
Right.
People lost their minds. I mean, there were thousands of signatures from very famous people that were like, stop the Frick. Everyone didn't want the Frick to change in any way. But the Frick wanted to change for a lot of different reasons.
I mean, to be fair, it was a pretty cool, intimate place you could go and see amazing art.
Well, the good news is, having been back before the opening, I can tell you that it is still an incredibly cool, intimate place to see art. And the things that they have changed, they've changed the way that, first of all, they buried underneath an auditorium underneath the garden that's exquisite.
Nice.
They did a very discreet addition. This is all done by the architect Annabelle Zeldorf, who is a really thoughtful, very canny person. They kind of bumped up the space where the music room was, and turned that into this vestibule, and there's a cafe now, and they also opened up the second floor of the Frick so that you can go into the bedrooms, which were once offices, and now are bedrooms again. And so you get more of a run of the place. It's more Fricky than the Frick was before.
You know, I'm going to go to this. I can go to, and I did go to the Frick before the renovation.
It opens April 17th. It's very close to us. Go.
What's
Run,
the
don't
ticket
walk.
cost? Do we know?
I don't, but I would bet that it's less than $20, but that's a bet.
Cheaper than going to see Clooney up on stage, huh?
Well, it is cheaper, indeed. So highly recommend. And then there's books, but I don't know if we have enough time to talk about books.
Unfortunately.
You know, you always have me on at the end. I should take up the entire segment.
Next week, you can, a half hour.
45
with
minutes.
Tarmy, okay? That's
Time
what we
with
want.
Tarmy.
Time with
Tons of time with Tarmy.
Look, the alliteration spills out.
The people want it.
Terrific. Tons of time with
They're
Tarmy.
clamoring for it, I'm sure.
Terrible time with
That's Bloomberg Business Week arts columnist
We love
James
James
Tarmy.
Tarmy.
Check out this and more in Bloomberg Pursuits.
More freaky. I like that.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Business Week Daily, getting ready to wrap up here on our Friday afternoon in a day where we saw U.S. stocks fall sharply, the S&P 500 index tumbling 2%, the NASDAQ 100 losing 2.7%, concerns about tariffs and inflation mounting, stocks suffering their second worst day of the year. Again, we are focusing and thinking about next week and when the Trump administration imposes those big tariffs on April 2nd.
412 stocks moved lower in the S&P 500 today, 91 advanced. This is what you call broad-based selling. On the week, down 1.5% on the S&P 500, the NASDAQ down 2.6%, the Dow on the week down about 1%.
Let's take a look at some stocks on the move this past week. With us to do that is Bloomberg News cross-asset reporter Emily Graffeo here in studio. Emily, so let's talk about it. Broadcom.
Broadcom was one of the worst performers in the S&P 500 on the week. It's also having a 5-day losing streak, which is the longest of the year. This is in part a story about risk assets falling this week after there's uncertainty about the economy, the direction of inflation. We had bad economic data. Broadcom is a chip company, so this is also a company that gets a lot of its revenue from China. In 2024, it got almost as much revenue from all of the U.S. than China. So it had more in the U.S., but China was kind of right up there in terms of where it gets its revenue. So it could be exposed to more of Trump's tariffs. But overall, tech is really getting battered this week, and Broadcom was one of the biggest losers of that trade.
This is crazy because you have to go back to a few months ago, and it was Broadcom's earnings report that caused shares in just a matter of a couple weeks to move more than 50% higher. That was back in December.
Yeah.
You now are back to levels seen almost before that report came out. It's down 32% since then.
Right, yeah. It hit the lowest level since December 3rd, today.
That's crazy.
And we know, right, this past week, we did see foreign officials, major tech companies pushing the Trump administration to kind of rethink some of those chip curbs, especially those who make AI chips. So, you know, the industry understands, like, the impact, right? We're seeing it play out on companies, specifically in the industry overall.
And the questions on spending on AI, too. That would weigh on a company like Broadcom.
I totally agree. All right, so let's get to Tesla. Interesting week for this one.
Okay, so Tesla, I have to admit, I was at a conference earlier this week. I was at the Exchange ETF conference.
In Las Vegas.
In Las Vegas.
Yeah, I heard there was like some nice dinners, some nice drinks, some nice gambling. Was there any working?
Yes, there was a lot of working,
Okay.
Tim. There was a lot of networking. I mean, a lot of networking happens
over drinks
and meals, over dinner. And we can't help that we're in Las Vegas and there's a casino right there.
Okay.
But anyway, I noticed that there were a lot of headlines on Tesla and tariffs, and I wasn't really following it, but you look at it on the week, it's up on the week. Tesla's actually one of the best performers in the S&P 500 on the week, even though it did fall quite a bit earlier in the week. I guess the story here is that out of all of the automakers, because Tesla manufactures in the U.S., they're a little bit more shielded from the tariffs.
Oh, yeah. So Tesla's
these other autos.
Yeah, Tesla's got factories all over the world, but the thing is the factories here in the U.S., which are in Fremont, California, and Austin, Texas, they build cars that are meant for the U.S. The factories in China and the factory in Germany, those are for other markets, so they're not getting hit with tariffs. But Elon Musk, as Carol pointed out earlier this week, did say that some parts of theirs will be affected by auto tariffs. But you're right.
Yeah.
I mean, this is like almost a pure play American company.
He said Musk tweeted or made a post on X, Tesla's not unscathed. The tariff impact on Tesla is still significant. But, I mean, when you compare it to GM and Ford, and it was interesting, if you look at the drop in Tesla, at least on the day, so today, Friday, lost $30 billion. That's almost the market cap of Ford and GM.
Wow.
So like it lost a Ford, and that is just how much bigger Tesla is compared to the other.
You know, we say that a lot, but every time we do it, it just reminds you how much the auto area has been kind of upended as a result of Elon Musk. It's pretty staggering.
Yeah, so the market cap of Ford, $38 billion, and Tesla lost about $30 billion on Friday.
Will you explain what happened with Wolfspeed today?
I will try. As a markets reporter, it caught my eye. I, to be honest, had not heard of this company before. They are a tech company.
Chips.
The stock fell over 50%, which is just absolutely wild. We did have a story on Bloomberg that they were struggling to reach a deal with investors to refinance their convertible bonds. I'm just going to read the line. So their shares closed at $2.59 Friday after sinking over 50%. A conversion to equity would be unlikely unless the price reaches $47, which just doesn't really look like that's going to happen. They also named a new CEO on Thursday. But again, from my angle, I just look at this. My first thought was, wow, if you were short this stock, you must have made a lot of money. And that is what the data from S3 Partners said. Paper profits of about $122 million on the stock's drop if you were short, at least on Friday for Wolfspeed.
Interesting week for some of these names. Great to check in with you. Emily Graffeo, cross-asset reporter at Bloomberg News. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers. You can find it on Apple, Spotify, or anywhere you get your podcasts. And speaking of that, you can also find our Bloomberg Business Week podcast on the weekend at those places as well, and also on the Bloomberg. You can catch it too on Bloomberg Radio at 8 a.m. Wall Street time.
That's when we listen to it at home with the whole family.
Really?
Oh, yeah.
That's super sweet. Have a good weekend.
You too.
Have a good weekend, everyone. That's going to do it for us. Thanks to our team. They keep us going. Balance of Power is next.
Politics to the world of business. This is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons.
Stocks tumble, bonds rally amid stress in tech, worrisome economic data, and tariff jitters ahead of next week's Liberation Day, as President Trump calls it. We'll have the latest and analysis of the impact of auto tariffs specifically with Jessica Caldwell of Edmunds.
Plus, our political panel will join us on what the sour sentiment means for President Trump as his administration today moves to formally abolish USAID and ask the Supreme Court to allow deportations of alleged Venezuelan gang members to resume.
And Vice President J.D. Vance travels to Greenland, arguing Denmark has not done a good job keeping it safe as Donald Trump reiterates his desire for control of the territory. We'll have reaction from former U.S. Ambassador to Denmark, Rufus Gifford. Thanks for being with us now on the Friday edition, the late edition of Balance of Power here on Bloomberg TV and radio. We talk about Liberation Day. Kaylee, that's what the president calls it, April 2nd. That's next week, but the market's, of course, worried about it now. We had one of our worst days of the year.
Yeah, in anticipation of what's to come, considering the economic data we got today in terms of the Fed's preferred inflation gauge and consumer sentiment with higher inflation expectations. Plus, you add on a less than spectacular debut for CoreWeave, the big AI IPO we got today that literally ended the day unchanged. All of it paints the picture of what was a tumultuous day with all of the major equity benchmarks down, bond yields lower as well to the tune of about 10 basis points on the 10-year Treasury yield. So for more on that, we turn to Bloomberg's Romaine Bostick, who's joining us from New York. So Romaine, obviously a lot of different factors roll into a day like this one.
Yeah, a lot of different factors. Ultimately, it really boils down to the economy. And Joe, you talked about this being one of the worst days. It's actually the second worst day of the year for the S&P 500 and third broadest sell-off of the year. But I want to go back to the worst day of the year, because that was just on March 10th, when the S&P dropped 2.7%. And the headline that day, guys, was speculation is intensifying that Trump is willing to tolerate hardship to the economy as he pursues that trade agenda. That was effectively the narrative this week as well. We saw that with him rolling out the auto tariffs, some comments that he made just a few minutes ago aboard Air Force One when it comes to pharmaceutical tariffs. And of course, that is the drumbeat heading into this April 2nd Liberation Day, where we're supposed to learn more about additional tariffs. And this is a market now that's trying to come to terms with that. Not so much as to whether it's going to kill the economy, because no one's really saying that, But what they are saying is there are certain pockets of this market and certain pockets of this economy that will not be able to withstand maybe the effects of those tariffs. And investors are trying to rotate out of those places and into places where they think they might find safety. And as Kaylee just alluded to, some of that safety isn't in the equity market at all. It is in the bond market.
It's not in CoreWeave, apparently, either, Romaine. As Kaylee mentioned, the IPO today. What do you make of this performance? Landed to the penny right where it started at $40. Was this a symptom of the overall market, a case of bad timing here, or another canary in the coal mine?
Yes, yes, and yes. I mean, I think most importantly, it's bad timing. If this had been an IPO that had come out, I don't know, 2 months ago, I think the reaction would have been a lot different. Remember, behind the scenes, this was supposed to be a much larger IPO, as much as a $5 billion valuation. They sold $1.5 billion, which was about half of what they were seeking just a week ago. So in that respect, it was a bit of a flop. When it came to market, it basically came in right around where it priced last night. $40 a share last night, opened at 39 today, closed at 40 on the nose. So what does that say? Is there investor appetite for the AI trade? Joe, the short answer is yeah. We talked to Dan Newman over at Futurum and a few other folks on Bloomberg Television, said the appetite's still there, but there are idiosyncratic issues, specifically with CoreWeave and specifically with some of these smaller secondary companies in the AI space that maybe just don't necessarily have the juice, Joe, that an NVIDIA or a Microsoft or one of those big names might have.
Really great to have you on the program. Romaine Bostick, after the bell on Bloomberg. Now for a look at today's economic data, which led to some of these losses. We turn to Stuart Paul of Bloomberg Economics. He's with us as well from World Headquarters in New York. Stuart, it's a pretty tough line today. Consumer sentiment concerning investors, PCE data concerning investors, inflation expectations, certainly when you look at Democrats concerning investors. With that whole composite we're presented with today, what happens when you throw tariffs on top of it?
It's just going to be even worse consumer sentiment going forward, and we're probably going to see that further bleeding into a lot of the spending data. Already today, we saw consumer spending far weaker than folks were anticipating, just 0.4% month-on-month growth. And a lot of that is because there's just not a ton of discretionary services spending going on right now. Folks are spending on some of the goods that they expect to be tariffed in the months ahead and that we expect to see reciprocal tariffs on April 2nd. But where they can pinch pennies, it appears that they are doing so. When we look on the inflation side, we are seeing still consumers bidding up the price of those goods that they expect to see tariffs on in the months ahead, but we're also seeing additional inflation on some of the services items that consumers just cannot avoid, things like healthcare and things like financial services. And when that's the case, you have a bit of a stagflationary tone to a lot of the data. It's no wonder why we then see consumer sentiment deteriorating and inflation expectations rising, as we did see in the final University of Michigan Consumer Sentiment Index printed at 10 o'clock.
Well, and keeping in mind that we have a non-farm payrolls report coming a week from today, Stuart, at what point does the mass quantity of not just the soft data, but the hard data as well signal to the Fed that maybe standing pat for as long as they are intending to stand pat right now is not going to be the way to go?
It's going to take quite a bit of time for what we're seeing in the soft data, that weakness, to start bleeding through more materially into the totality of the hard data. We're still expecting to see 150,000 plus jobs added in the March payrolls print. What's really going to be difficult is whether the unemployment rate is going to tick up. It would just take about 100,000 folks who were ill and out of the labor force last month entering the labor force and finding it difficult to find new jobs to boost the unemployment rate to about 4.2%. So it's going to be a knife-edge call in the Friday jobs report. Still, 4.2% would not be enough, I think, to turn the tide for the Fed when it comes to rate cuts. I will say, though, that looking at pricing right now, as Romaine alluded to earlier, bonds are catching a bid as folks are taking a flight to safety. There is about 75 basis points of cuts priced in this year. That's about where we were to start the month, and that's where we were given the fact that equities were taking a tumble earlier in the month. Bonds are taking their cues from equities, and it seems like sentiment is as well. It's going to take quite a bit of time for sentiment to come from the equity market and then all the way to actual hiring plans, actual hiring, and consumer spending down the line. It takes quite a bit of time.
Well, we're hearing the R word more often. I don't know if that's, Stuart, justified in your view when you consider some of the federal worker job cuts that are coming, some of the worries that we've already talked about in the data. Does that sound like something that's part of our picture in 2025?
Look, you're not going to hear the R word from me. You're not going to hear it in 2025. I will say, though, that Q1 growth is going to be dismal. Right now, we have penciled in just about half a percentage point of annualized growth in the first quarter of this year, just about 1.5% growth for the full year 2025. A lot of folks out there still have about 2% full year growth in 2025. We think those estimates are too high. We think they're going to revise down their numbers based on what we saw just today with the PCE spending data. I'm not ready to say the R word, but it is going to be chunky, hard data to start the year, that's for certain.
All right, Stuart Paul of Bloomberg Economics joining us from New York. Thank you so much. And coming up, we'll turn from New York to Greenland, where the Vice President J.D. Vance and National Security Advisor Mike Waltz paid a visit today, specifically to a U.S. military base, as the president intensifies his campaign to bring the territory under U.S. control. We'll speak with Rufus Gifford, former U.S. ambassador to Denmark, next on Balance of Power on Bloomberg TV and radio.
Greenland's very important for the peace of the world, not us, the peace of the entire world. And I think Denmark understands it. I think the European Union understands it. And if they don't, we're going to have to explain it to them.
This has to happen. And the reason it has to happen, I hate to say it, is because our friends in Denmark have not done their job in keeping this area safe.
President Trump and Vice President Vance making their case today on why the U.S. needs to take control of Greenland from Denmark. The Vice President today visited the territory along with the Second Lady and National Security Advisor Mike Waltz, visiting the northernmost U.S. Space Force base. And joining us now for more on Bloomberg TV and radio is Rufus Gifford, former U.S. ambassador to Denmark and former chief of protocol for the Biden administration. Ambassador, thank you so much for joining us here on Balance of Power. We'll get into the kind of means with which this administration is pursuing it, some of the aggressive nature of this pursuit. But does the fundamental principle here make sense to you that the U.S. needs Greenland for national security purposes and it would be better kept under U.S. control?
This is how I feel about it. First of all, thank you so much for having me, and I'm really grateful to be engaging in this conversation. This is how I feel about it. Look, Greenland is vitally important. There's no doubt about it. And I believe that with the continued buildup of the Russians in the Arctic, the continued interest of the Chinese in the Arctic, we as the United States, we as NATO need to take this entire region very, very seriously. But this is where I think that they are just dead wrong, meaning the Trump administration here. There is zero reason why we need Greenland, why we need to acquire Greenland for some reason in order to achieve these goals. I mean, in essence, you know this, that Greenland is NATO because the Kingdom of Denmark is NATO. NATO's mission is in large part to defend the alliance. So were there any major national security challenge in this part of the world, the entire alliance would be compelled to respond. There is zero reason why, if we did want to re-engage militarily in this part of the world, meaning open more bases, remember, Greenland used to have a number of U.S. bases during the Cold War, and we have scaled back since the end of the Cold War. Both the Danes and the Greenlanders would be enormously receptive to a greater military presence on Greenland. But you know how you got to do that? You got to treat them with respect as an ally, sit across the table with them and negotiate. What we're seeing here is this kind of authoritarian rhetoric that just pushes both Greenland and Denmark away from us. And for me, and for so many folks who have had the honor and privilege of serving the United States, that is just such a shame. It takes us all away from our ultimate goal here, I think.
Well, Ambassador, let's listen directly to what Vice President J.D. Vance had to say today upon landing in Greenland, a direct message to Denmark. Listen.
Our message to Denmark is very simple. You have not done a good job by the people of Greenland. You have underinvested in the people of Greenland, and you have underinvested in the security architecture of this incredible, beautiful landmass filled with incredible people. That has to change. And because it hasn't changed, this is why President Trump's policy in Greenland is what it is.
Ambassador, what does not J.D. Vance understand about Greenland?
Well, one, he just gives no details, right? Well, I don't even know what he's talking. I don't mean to be so flippant here, but I don't know what he's talking about. Those extraordinary young men and women who are standing behind him during that press conference work with the Danes every single day. Those amazing young men and women behind him understand how important the Denmark is as an ally and how vital that partnership is. And I just simply don't know what he is talking about. Again, if we need to, in a bilateral manner, or more, I think more effectively, as the NATO alliance, take the Arctic more seriously, investing. He mentioned icebreakers today. I absolutely support that. We should be investing more in our icebreakers like the Russians and the Chinese are. But again, there is zero reason why we need to be spending trillions of dollars as U.S. taxpayers to acquire Greenland when you can, again, sit across the table from one of our best allies in the world, Denmark and Greenland, and negotiate a deal to do just that. I think it is, yes, it is disrespectful to the to one of our greatest allies, and I actually truly do believe this is counterproductive. They are less trusting of the United States. My friends in Denmark are less trusting of the United States today than they were several months ago. And that is a darn shame as far as I'm concerned.
So do you think that those sitting in the Kremlin right now are thinking, oh, the U.S. is getting more serious about the Arctic, we're going to have to counter this, this is bad for us, or, oh, look, partners in NATO are fighting again, this actually might be pretty good?
Anytime Donald Trump criticizes a NATO ally, J.D. Vance is in Greenland criticizing Denmark, as he so openly did there, which I just think is so shameful. It certainly plays into Putin's hands. There's zero doubt about that. Your overall point, which is important, though, and we shouldn't forget it, that a military re-looking at the Arctic and reinvesting in the Arctic from a national security standpoint is important. I hope we take it seriously. I hope the Canadians, the Norwegians, the other great NATO allies like Denmark who border the Arctic Ocean think about it in the same way. And then we can collectively counter that buildup that we are seeing from some of the adversarial countries.
Well, Vladimir Putin spoke publicly in a speech yesterday, said it can look surprisingly only at first glance and would be wrong to believe that this is some sort of extravagant talk by the current U.S. administration. You think this is something Donald Trump has talked about with Vladimir Putin?
Oh, gosh. Look, I do not know the answer to that, of course. I will say this, though. I think I look at Greenland similar to the way that the rhetoric involving Greenland similar to the rhetoric around Canada. It just, honestly, guys, to me, it just doesn't make logical sense, and I can't make sense of it. There are so many ways for us to, again, sit across the table with some of our greatest allies without disparaging them, realizing that we need to work together to take this region more seriously in order to counter the great threats that are out there. And you know what? We bring them closer to us in that instance. And it's just, to me, that is the answer here, and is not openly criticizing a country whose men and women have fought and died alongside Americans for the last 80 years and are one of the best allies who never hesitate to say yes at any given moment. And certainly that was my experience, and it is the experience of every other U.S. ambassador I know that certainly had the honor and the privilege of representing the United States in Denmark.
And finally, Ambassador, during the course of your service as an envoy in Denmark and working as head of protocol, chief of protocol in the Biden administration, did you ever use or advise anyone else to use the app Signal to conduct official sensitive business?
I'm actually not sure that I personally use Signal all the time. I will tell you that. I don't think Signal existed when I was ambassador to Denmark. As someone who had to take off his watch every time he went into his wing of the embassy, I can tell you that there is no possible way that I would have ever engaged in the way that the folks on the at Signal Gate. It is obviously classified information. It is obviously inappropriate, and I wish they'd speak honestly about it.
Ambassador, it's great to have you with us. Rufus Gifford, former U.S. ambassador to Denmark, now with Elrod Gifford Group. Great to have you here on Balance of Power. Coming up, we'll play this to the panel. The Vice President's visit to Greenland with Rick Davis and Jeannie Shanzano next on Balance of Power on Bloomberg TV and radio.
President Trump is absolutely serious with the vice president and with his team about the Arctic and the security that the Arctic brings and that you bring to the Western Hemisphere.
National Security Advisor Mike Waltz, the person at the center of the signal scandal in Greenland earlier today, alongside someone else who was in that group chat, the Vice President, J.D. Vance. And for more on the political and geopolitical implications of this visit, we turn to this evening's political panel. Bloomberg Politics contributors Rick Davis, Stonecourt Capital partner and Republican strategist, alongside Democratic analyst Jeannie Sheehan Zaino, political science professor at Iona University. Welcome to you both. I read this morning, Rick, that when you send J.D. Vance in somewhere, that you know it's not going to be a charm offensive, that what he brings in is aggression. Is that essentially what he was doing on behalf of the president today, trying to bully Denmark specifically into agreeing with them on Greenland?
Yeah, when you originally had the second lady, Ursula, going to the sledding, the dog sled races and things like that, that was the charm offensive. Scratch the charm offensive. That got canceled. The vice president got out of the trip. And yes, this was a sort of strong message to the people that we're coming and you better make your peace with it, and at a time when they're just forming a government. But I would say what's interesting about this trip is they actually didn't talk to any Greenlanders. I mean, they went to a U.S. military base and gave all that information to the Greenlanders through talking to U.S. military personnel. And so it was an odd way of conveying a message, right? I mean, like, we're coming. And by the way, we're already here. We're at a military base, and we're telling you, you will be part of the United States.
This is a trip that was changed on a number of times, scaled back. Then all of a sudden, Vice President was added. Michael Waltz was in. Then he was out. Then he was back in. Jeannie, what do you make of the optics here? Was the point of this to prepare the world for the overtaking of Greenland, or to change the subject away from signal?
Yeah, I mean, I'm listening to Rick talk about dogs, and that is what J.D. Vance is. He is Donald Trump's attack dog, and off he seems to go to Europe.
That was close.
To attack the Europeans. Yeah, that's right. And to attack the people of Denmark, or at least the government of Denmark, and to say that they are not doing a good enough job keeping the people of Greenland secure, which is curious because Denmark is one of the original founders of NATO. And so why is that? Would that be an issue? And so, this is where Donald Trump and J.D. Vance find themselves. And I think if we want to know if they are serious about this, just listen to Vladimir Putin, who was referencing the fact that in the late 1860s, when we as the U.S. were talking about buying Alaska, the newspaper folks and journalism were laughing as if it wasn't real. And of course, we purchased Alaska. So Vladimir Putin seems to be answering the question we're all asking. Donald Trump is deadly serious about this, and J.D. Vance spent a few hours on the ground in a military base to make the point.
So if you're Panama, Rick, which Donald Trump has also talked about exerting more control over the canal, and you're seeing now the deal that was supposed to happen with BlackRock with the ports owned by the Hong Kong conglomerate falling apart, or at the very least being delayed. Is Panama next? Are we going to see people sent back down there to try and reinforce that message?
Well, I think the message that we heard in Greenland today was global peace and our security are dependent upon this big hunk of ice in the middle of the Arctic. So we can't afford to let anybody else manage it but us, right? And if you then have that premise around the world, does that mean we need to be talking to Egypt about the Suez Canal and owning that? Does that mean we have to talk to Panama about owning the Panama Canal? I mean, these are incredibly important strategic locations around the world where we have lots of agreements in place, all of which, frankly, have been hosting now Chinese vessels, Russian vessels. Maybe we're in for a change.
We'll be talking about it more with Rick Davis and Jeannie Sheehan Zaino. They're back with us later this hour with breaking news as Elon Musk puts on X that XAI has bought X in an all-stock deal. We'll have more on this breaking story coming up next on Bloomberg TV and radio.
This is Balance of Power on Bloomberg TV and radio. Alongside Joe Matthew, I'm Kaylee Lyons. Some breaking news we bring you at this hour. Elon Musk just made an announcement on X that XAI has acquired X in an all-stock transaction. It values XAI at $80 billion and X at $33 billion. Keep in mind, Musk bought X, when it was then Twitter, for $44 billion back in 2022. For more, we turn to Bloomberg's Max Chafkin, who covers all things Elon Musk for us. So, Max, he suggests that the combined company blends XAI's advanced AI capability and expertise with X's massive reach. Are you surprised by this one?
Well, in some ways, I'm surprised because we have this, late Friday news in which one Elon Musk company is buying another Elon Musk company. Not totally clear how they came up with the valuation. In another sense, it's not surprising because these two entities, XAI and X, have been kind of operating like one company. So X, which is the name for Twitter that Elon Musk gave it, has this chatbot inside of it, Grok. That Grok was created by XAI. XAI is training off of data from X. I know it's a lot of X's there, essentially all your social media data. And it's also seemed like one of Musk's plans to make this Twitter acquisition pay off. He paid $44 billion and then promptly lost a lot of the advertising, was to kind of pivot to AI. So you did sort of think, how is he going to do this while having XAI as a separate company? And I think now we have the answer. This sort of makes it a little less clumsy. I think there are going to be questions from corporate governance experts, and I would expect that the investors have agreed to this if he's going to do this. But you could imagine if this were a public company, we would see shareholder lawsuits and that sort of thing. But of course, it's a private company in this case.
So what will become of X on a consumer-facing level if this deal closes?
I think my guess is that X will stay the same. The difference will be that now XAI, this chatbot, owns this data that X has and that XAI, the chatbot, is using to train itself on. So my guess is nothing will change. Perhaps it will allow X, the company formerly known as Twitter, to be a little less dependent on advertising, which has been Elon Musk's plan all along. It also allows Elon Musk to sort of claim that he got a good deal, like he paid $44 billion, he sold it for $45 billion, he hasn't lost money, and my guess is he will continue to post on social media with his usual ridiculous schedule all day and all night.
Boy. Thanks for your ridiculous schedule, Max, being available on the breaking news here. Max Chafkin reporting for Bloomberg. We thank you. As we turn to another important story that we've been talking about throughout the evening here, spinning a couple of plates on Balance of Power, of course, tariffs, with President Trump discussing earlier today his phone call with Canadian Prime Minister Mark Carney. They agreed to meet after Canada's election.
We had a very good conversation. Mark called me today at 10 o'clock. We put out a statement. We had a very, very good talk. He's going through an election now, and we'll see what happens. But we're going to end up with a very good relationship with Canada and a lot of the other countries. Some we probably won't. It won't be so pleasant.
The call between the two came amid an intensifying trade war, of course, with President Trump announcing a 25% auto tariff, Canada threatening further retaliatory measures. Joining us with more analysis on the fallout here, these impending tariffs, Jessica Caldwell, the head of insights at Edmunds, as we specifically focus on autos. Jessica, it's great to see you. We're hearing reporting that a lot of people, are consumers in this case, not just auto companies, are front-running the implementation of these tariffs. Do we all need to go out and buy a car this weekend?
If you're looking to buy a car in the next, I say, month, it wouldn't be a bad idea to get a car as soon as possible. I mean, we don't know exactly if these tariffs will be pushed back or they'll even go through. But if you're at the brink where you've priced things out, you can't afford much more in your monthly budget, it probably is a good idea to go out and get a vehicle, because inventory right now is still good. Incentives are still out there. So sometimes it's the case of better be safe than sorry.
Well, so when we consider what we're actually bracing for here in terms of potential price changes, Jessica, what will the impact be if even we're talking about U.S.-made cars, or at least finally manufactured cars in the United States that won't be subject to this 25% levy, but we're still talking about higher input costs like steel and aluminum? Do we have to expect prices to go up no matter what, even if we're not talking just imports?
Yes, I mean, that's right, because also along with steel and aluminum, we also have parts costs. So if you think about an engine or transmission coming from Canada or Mexico or wherever it may, that's significant cost, a significant part of the cost of the vehicle. So when that gets tariffed, that's that's definitely noticeable. It's not something that the auto companies can absorb. So it really just isn't about final assembly where the vehicles are made. It is how much of their parts are also coming from other countries. Some of that is not quite clear, but it seems like the Secretary of Commerce is going to straighten that out quite shortly. And we know that there's no vehicle on the road that is 100% built and sourced, and every part comes from the United States. The auto industry is a global business.
Well, when we consider where the impact is really going to land here, analysts suggest that companies like Toyota, Subaru, Honda, which have the lowest stockpiles of cars already in the U.S., could see the most immediate impact in terms of price increases and therefore starting to hit affordable compact cars first. Is that going to be the potential here for people who don't have a lot of money to buy an expensive car would in fact be impacted the most?
It depends really how the companies choose to absorb this cost. We don't think that they're going to just hike prices 25% on everything. Some of it is going to come out of their bottom line. I imagine also incentives will probably be the first to disappear before price increases happen. So those, 2.9% finance offers, $2,000 cash back, those will probably go first. And then eventually prices will go up. And I imagine it's hard to figure out exactly where, because it's not as if every tariff cost is going to apply for that vehicle. Because as you alluded to, someone that is paying $25,000 for a car is probably pretty price sensitive. And even if that car is heavily tariffed, comes from Mexico or whatnot, they're not going to be able to absorb those additional costs, unlike someone who's buying a $100,000 car. So auto companies are going to have to look across their lineups and figure out kind of where are the places where costs can be absorbed without doing really the least amount of damage to their sales.
And what's going to happen in the used car market, Jessica? Because obviously new is one thing, but we saw what happened during COVID with the used market.
Right. During the semiconductor shortage, a lot of people just went right to the used market. And what happened? Prices went up. So I would imagine that people think, okay, I'm going to circumvent this tariff. Let me go buy used. And then the demand on the used car side will go quite high, and that's going to raise prices. And we know that used inventory this year is already under pressure because we didn't see a lot of leases back in 2022. So those lease returns, which usually kind of pump up that near new used volume, that's not going to happen this year. And then also, these companies are having to worry too about repairs because parts we know will be tariffed. So someone buying a used car, you have to have it repaired more. Dealer reconditioning costs, which also requires parts. All of those kind of things in the vehicle ownership chain are going to require additional cost.
You're going to see a lot of people leasing vehicles, buying the car they're leasing, I'm guessing. Is that something you're expecting to see?
I would definitely advise people to look and see how much what's called like the lease buyout cost is. So you're at the end of your lease, how much does it cost to buy it outright? The thing is, 3 years ago, prices were high because we were in the semiconductor shortage. So people didn't necessarily get a great smoking deal on their lease back then. But that said, it could be better than what we're seeing today because we do know prices just are keep going up. So if you're in that situation, definitely look and kind of weigh out how much does it cost to buy or lease versus buying a new car today because you're probably going to pay higher prices. And also, we know interest rates are quite high. The average interest rate for a new vehicle right now is over 7%. So got to factor that into the equation. Hardly anyone buys cash vehicles anymore.
Well, that's exactly what I wanted to ask about, Jessica. The kind of sensitivity to the sticker price of a vehicle versus the rate you have to pay if you need to borrow money to make that purchase. If we were to see rates go down because tariffs have a wider hit on the economy, would that actually be something that can help offset the effects we're talking about here?
It would certainly help. Obviously, if interest rates were to go down, I mean, right now, the average is 7.2% on new vehicles. So that puts us into an average monthly payment around $740. It's considerable. So if interest rates, I think, were to go down, that would help. But the issue is that most Americans are used to low interest rates because we had them for so long following the recession. So anyone that hasn't been in the market for 5-6 years, which is pretty average, they're going to think, oh, that interest rate looks quite normal, or maybe even high. Even if it was to go down a few points, they would probably think that would really make a difference compared to what they've been paying already or what they're used to.
Mm-hmm. You mentioned that it's essentially impossible to find a car that's entirely made in America, but I keep seeing charts that put Tesla and Rivian at the top with 100% made in the USA. Is that not the case?
What they're saying is that their final assembly, so their vehicle plants, are made here. But if you broke down those cars and all the different types of components that they have in them, you're going to find definitely some foreign parts in there. Like I said, for the parts, it seems like it's a bit still, the administration is still like working through some of the details and those rules. So that's probably why there's some confusion. But I think everyone's kind of taking that final assembly list and kind of using that sort of as a guideline. But it's so much more than that, just because, like I said, engines, transmissions, those are very costly items in vehicles. And if those are made in a foreign location and the vehicle is still assembled in the United States, that's still a pretty, sizable tariff that you're going to see on that vehicle.
All right, Jessica Caldwell, head of insights at Edmunds, joining us ahead of those tariffs going into effect next week. Thank you so much. And coming up, Elon Musk believes that the Doge can cut $1 trillion within the first 130 days of President Trump's presidency. We'll bring back our political panel for more on that next on Balance of Power on Bloomberg TV and radio.
believe that the government can have an Apple Store-like experience.
The two improvements that we're trying to make to Social Security are helping people that legitimately get benefits, protect them from fraud, and also make the experience better.
At this moment in time, less than 0.15, not 1.5, less than 0.15 of the federal workforce has actually been given a RIF notice.
Basically, almost no one's gotten fired.
Doge employees, including Elon Musk, on Fox News last night on their experience so far working for the government cost-cutting effort. And joining us now with the latest here on Bloomberg TV and radio is Bloomberg's Wendy Benjaminson. So, Wendy, I don't know about the whole Apple Store thing, but what we do know when we're thinking about actual hard numbers here is that Elon Musk has set some pretty ambitious targets. Initially, it was $1 trillion. Then he suggests last night $1 trillion can be cut within the first 100 130 days. We're already well into that period. Does that actually work mathematically?
No, it doesn't work mathematically. And his wall of receipts has been fact-checked by almost every news organization in town, and it is just a work of fiction. He says that there's all these millions of dead people getting Social Security benefits, and it turns out it's less than 1% of what Social Security spends. There are a number of other things where he says this will save this much money, and he's off by $1 billion. The math doesn't work, and it is the idea that they could literally cut $1 trillion, even while they're saying they're not firing these people, which apparently they are. It's just through the looking glass.
Well, it's interesting to actually see the group for the first time. By the way, I can never get help at the Genius Bar at the Apple Store. I don't know if that's the right comparison to make here. But do the optics help? We hear about these people in dark rooms in Washington with plugging into computers and thumb drives. But we actually saw some of the employees of the Doge. They talked about their work. Does that help Americans kind of warm up to this idea?
Maybe, but when they're accessing your personal financial information, when they're accessing your tax returns, I saw in the terminal just a little while ago that Musk is going to visit the CIA next week and muck around in there. And it certainly doesn't make you feel secure, especially when some of these people are very young, have no experience. I mean, there's the guys who founded PayPal, and sure, they can understand computer systems and how to make things efficient. But some of these younger people have absolutely no experience in government or finance or budgeting, and you sort of wonder what they're actually doing. I think it's more unsettling.
It's great to have Bloomberg's Wendy Benjaminson back with us at the table as we turn now to our signature panel, reassembling the panel with Bloomberg Politics contributors Rick Davis and Jeannie Shanzano. Your thoughts on this? Jeannie, I'm guessing you're on board now that you had a chance to see this interview. The government as Apple Store, is that even something that should be a goal for the federal government? What do they mean?
That was one of my favorite parts of the interview. Like you, Joe, that hasn't worked so well for me at the Genius Bar, but I do love my Apple products. So, I think the reality here is that there have been long attempts to take what is happening in the private sector and move them into the public sector. We saw this, for instance, with Robert McNamara way back in the day, taking what he did at Ford and moving it into the government during Kennedy and Johnson's administrations. But the reality is that it takes somebody, to Wendy's point, who understands the difference between the public and the private sector. And so on so many levels, the approach they've taken so far with this, chainsaw cut and then look back and try to correct has not worked, and it doesn't work in the public sector.
Well, I want to focus more on the man Elon Musk himself, Rick, because just since we've been on the air in the last 20 minutes, we've gotten news pertaining to multiple parts of his business. A headline just crossed the terminal that NASA has just awarded a launch services contract for SpaceX's Starship. Just before that, Musk announced that xAI is acquiring X, another one of his businesses. We can check Tesla any day of the week and see how that is performing. He has other things that are tied to him here. How much longer can he realistically keep this effort up?
I think forever. I mean,
before it starts weighing dramatically on businesses that have boards of directors.
How in the world does this guy have all this time to do this? And oh, by the way, he set some record for gaming in one continuous. I don't think he sleeps. He's an extraordinary individual. He's clearly brighter than the average individual. He's accomplished more in a short lifetime than almost anybody else that we know in the last 50 years. And so I think you have to give him some credit for being able to manage all these things in a way and create them out of almost whole cloth. Whole industries like the space industry didn't exist until he tackled it himself. And so can he accomplish these tasks in government like he has accomplished them in the private sector? I think it's a very good thing to have private sector people inside of government and trying to find ways of improving it. I would love government to be like an Apple Store. I think everyone deserves that. We pay our taxes, and when we look at it ourselves in the mirror, we can't really see very many things we get for that, right?
Well, yeah.
The global security envelope, except every night we watch the news and somebody's killing somebody. So, I think it's very good optics for Elon Musk and the Doge team to put on suits, which they don't wear in the Oval Office, but they wear on Fox, and they talk about what they're doing. They should do that more often. It would sort of, allow people to determine whether what they're doing is worth all the effort and attention that we're giving it.
Talking about the timeline here, as you bring up, Kayleigh, how much time does he have left? Maybe we're almost there. In this interview, Musk laid out his timeline for Doge to complete the cuts that he mentioned in federal spending. Listen.
A 15% reduction can be done without affecting any of the critical government services. I think we will have accomplished most of the work required to reduce the deficit by $1 trillion within that time frame.
So in that time frame, 130 days.
130 days, Jeannie. That brings us to May 29 if he's working weekends. Is that the off-ramp here? Did Elon Musk just tell us when he's leaving Washington?
Yeah, I mean, that seems to be, unless he is held over. But the reality is there is going to be a point at which we are able to judge. Number one, did he really save this much money? And number two, did he make the government deliver and be more effective? Everybody would welcome that. But the reality is so much of what he said last night just doesn't ring true. For instance, the idea that nobody's been fired. Well, we know that is simply not the case. And by the way, on the gaming, the scuttlebutt is he's not actually playing those games. I don't know a lot about it.
I heard something about that.
Yeah, thank you, Kayleigh.
All right, I'm not going to mess with that one, whatever he's doing on his phone. Just quickly, Rick, on what's happening on other phones. We're ending this week, having begun it with the start of Signal Gate. We haven't seen that much talk about it today. Does that mean the administration has successfully spun the news cycle away from it?
Yeah, I don't think so. I mean, the backfill I'm getting is Israel has complained bitterly about it because the individual that was named in the email or the text chain was an Israeli intelligence officer, and so they are offended that we would not take better care of secrets that they have shared with us. That's how they found out where the individual was, to be able to facilitate the attack. So I think within the security community, this is still a very hot topic. And I think the administration is trying to figure out how to manage it. But I don't think we've seen the end of this story. And I still believe that someone is going to have to take the responsibility for this, and I can't imagine their future in the administration would be very long.
All right. Well, Rick Davis says it's not over yet. Unfortunately, our panel segment is over for today. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, thank you so much. And still ahead, we'll look ahead to what Washington is watching this weekend. Next on Balance of Power on Bloomberg TV and Radio. This is Balance of Power on Bloomberg TV and radio. Alongside Joe Matthew, I'm Kaylee Lyons as we wrap things up on this Friday, but are looking ahead to the weekend where President Trump is expected to meet with the Ecuadorian president, Daniel Noboa, at Mar-a-Lago tomorrow, according to reports. So a continuation of the many world leaders that he has met with in just the last 10 weeks.
He's already there, right?
He is already there,
early
yes.
out this Friday. He's
Left
made his
Washington
way
pretty early.
back to Mar-a-Lago. Wednesday, I should say Sunday will be interesting because we're watching Wisconsin. The Supreme Court race there is a big one. Elon Musk, who we've been talking about a lot tonight, has invested himself in that race and in fact will be on the stump, will be campaigning for the conservative candidate on Sunday.
Yeah, so he will be there Sunday. That, of course, is an election that takes place Tuesday, the same day as the special elections in Florida. So we have a lot to look forward to next.
Didn't even mention Liberation Day. I believe that's Wednesday. Get ready for a lot more talk about tariffs, and we'll set you straight on what we're learning from the administration. In the meantime, read up in the Washington Edition newsletter on the terminal and online.
Enjoy the weekend. We'll see you Monday here on Bloomberg TV and radio.
has not been a great time for genius. The people who claim to have it do not seem to qualify for it. The people who diagnose it in others seem to have a very, very narrow definition in mind. And the people we can all agree are stone-cold geniuses always seem to have a dark side. I read in Bloomberg Businessweek about the biggest crypto genius of them all, Sam Bankman-Fried. At his peak, he was worth like $26 billion. And that was before he was accused of running one of the biggest frauds in American history. His defense is that he is not a criminal, essentially, just inept. What does it mean to have genius in work, in the marketplace, in life? And who is even to say? To make anything simple takes actual genius, and we're going to try to live up to that name together tonight. It's the Business Week Show. Hello, I am Max Abelson, and I'm not a genius, just a regular, like slightly above average journalist who has spent about the last decade and a half here at Bloomberg News and sometimes our magazine, Bloomberg Businessweek, writing about Wall Street's money and power. And what that means is I write about ambition and ownership and imagination and survival and risk and second acts and, of course, genius. Tonight, and in the weeks to come, we are going to be talking about those things at this table with people whose lives and careers and ideas are big or interesting or just really fun. So, welcome. This is the Business Week Show, and it's starting right now. If you consider yourself a master of Wall Street, a connoisseur of investing, a soothsaying financial genius, a brilliant portfolio manager, our guest has very bad news for you. Burt Malkiel's book, A Random Walk Down Wall Street, 50 years ago, had a clear and vivid message, which was that Wall Street genius is really just an illusion, and that professionals in pinstripe suits, at the end of the day, are no better than naked animals. It was a genius and radical idea, because what he had to say is that you should forget them and just buy and hold clear, boring, basic, low-cost index funds. He is here to tell us about it. Burt Malkiel, welcome to the show.
Thank you very much. Glad to be here.
Your book is actually, it's pretty funny. It's a little saucy sometimes, your book. I mean, you say no one in finance can really forecast the future, or at least they can't do it successfully, consistently. You know, I think you use the word genius in quotation marks, and you give it to Ponzi schemers and whatnot. Right now, are there any actual individual geniuses on Wall Street? You know, real human geniuses, maybe AI is the genius we've been all waiting for. Can you identify any current geniuses on Wall Street right now?
Well, as you know, I put genius in quotes because I'm not sure there are geniuses in the market. And I've always said I would much rather be lucky than smart. Are there some hedge fund people who have, in fact, made a lot of money? George Soros bet against the British pound and made a lot of money. There were people who sold short in 2000 and made a lot of money. But I am not willing to say that they were geniuses. I want to say that they were lucky, because for every one of them, there was a hedge fund that, in fact, lost money. No, I don't think there are geniuses. I think there are a lot of very smart people in Wall Street, but it is not possible to predict the future. And, you know, it's kind of very interesting how you talk about AI. I recently had to give a presentation on the economic outlook. And I thought, you know, just for kicks, I will go to ChatGPT and I will ask, can you give me an outline of what I should say? And actually, ChatGPT gave me a wonderful answer. It was a one-sentence answer. I cannot predict the future.
It might not necessarily qualify as genius, but you're able to write about Wall Street with clarity, which is really unusual because Wall Street, and I suffer from this myself, you speak to Wall Street executives and they absolutely fetishize complexity. Why does Wall Street like to make things sound so complicated? Is there something sinister or something that has to do with the ego?
I don't know whether it's sinister, but this is a very highly paid profession. And someone like me who says, listen, don't listen to anybody. Just buy a simple index fund and keep on investing period after period. If I'm charging you 2% a year to manage your money, I want you to think you can't do it yourself. So sure, you've got a vested interest. This is a very highly paid profession. These guys do very, very well. Is that sinister? I don't know. You call it sinister, anything you want, but is there an incentive to make it seem like it's very complicated, that ordinary people can't do it themselves? I think that's absolutely right.
The honest truth is, it's not necessarily that I think that the aura of complexity on Wall Street is coming from a sinister place. It more like it makes me feel bad or makes me feel dumb, and that I appreciate that your book is sort of written so that I can understand it. But it does make me think about exclusion in a small way, because so many stocks are owned by so few people in this country, because the very wealthiest people in America have such giant portfolios, that when the stock market goes up, inequality goes up too. Is there anything that can be done to change that in the future?
One of the things that's impressed me throughout my life is really how capable so many people are. And I think to the extent that we can eliminate discrimination, I mean, for example, opening up our jobs, our economic opportunities to women has been a very good thing, and I think has been generally helpful for women. I think it's the same sort of thing in terms of racial discrimination. I am absolutely convinced that rather than there being just a small coterie of geniuses, that intelligence is very widely distributed in our population. And so my own sense would be the more we can do with education, the better.
Why is it that we need geniuses, or really just the concept of genius? Is it like the way we need heroes and heroism, to help just explain the world and justify?
I think we need innovators, and I'm not saying that innovation isn't good. We absolutely do, but I'm not going to call them geniuses. And Jack Bogle would certainly never have called himself a genius. But I think we do need innovators. There will undoubtedly be financial products that are actually good for one. I'm not a fan of Bitcoin. I don't think, I don't recommend that any investor buy it. But will there be improvements in the payment system in the future? And will there be digital currencies in the future that are stable and that are useful, as opposed to something that goes up $1,000 or down $1,000 in a day? Absolutely. And there's room for much more innovation in finance. So I think there will be innovation. There should be innovation. I just wouldn't call it genius.
That was great. Burt Malkiel, thank you so much.
Thank you so much. I really enjoyed our conversation.
Stay tuned, because next we have a very far-out genius. There is no one way to be a genius. You could be dreamy and far out. You could be scrupulous and scientific. You could work within the institutional establishment, or you could honor indigenous wisdom. All of those descriptions apply to this guest. Moraba Jah is a space environmentalist, an astrodynamicist, a spacecraft navigator, and the first African-American professor of aerospace engineering at the University of Texas. Last year, the MacArthur Foundation gave him a fellowship that is informally known as a Genius Grant. So, if you want, you could call him a genius, you could call him Professor Jah, but you'd rather you call him Moraba. So, Moraba, welcome.
Great to be here, my brother. Thank you so much.
Really glad to have you. I really love the phrase, a stroke of genius. You were in Alaska with your family in a hotel one morning. I think you were taking a shower.
Yeah.
And you had this feeling and this vision that kind of struck you. And, you know, whether or not it has anything at all to do with genius, tell us about that moment.
You know, I'm in the shower, and I felt a presence. And in my mind's eye, I saw flashes of scenes from like history and how in the beginning, whatever that means, it seems like there was this intergenerational contract of stewardship with the planet, but that humanity over time has mostly abandoned that intergenerational contract of stewardship and has forgotten about how interconnected things are.
Did that moment change the life you led and the work that you do?
Absolutely. So one of the people that I really look up to is Jane Goodall. I watched something about Jane where she said that she went to a meeting as a scientist and she left that meeting an activist. In very similar ways, I went to Anchorage kind of just this scientist, and I came back both a scientist and now this space environmentalist activist to really try to, I guess, really showcase how we need to protect orbital space.
If there's a kind of genius that means something to you, something that you would want to live up to, or something you'd want to recognize in yourself, what would that kind of genius like actually look like?
To me, the best kind of genius is simply allowing myself to let the universe go through me and, I guess, use me as some sort of vehicle for the work that I'm trying to do. And if I can keep myself kind of in the moment and in a place of compassion and empathy, then I think genius is just what comes through when you allow that to happen.
There's more garbage orbiting the Earth than there are working satellites. You now work not just to make sure that all that stuff is properly tracked, but to be an evangelist for expanding the way we think about environmental protection so that it includes all that stuff. What can those of us who are not scientists, what can we do to help you?
Every day, the technologies that we have are more and more reliant on these robots in the space that we call satellites. And we're tracking about 50,000 things ranging in size from a cell phone to the space station. 5,000 are working and everything else is garbage. So that's like 90% of the stuff is trash. The thing that most people just don't realize is that these satellites that are providing these critical services and capabilities, position, navigation, timing, communications, internet with the Starlink satellites, right? Any of these things can get schwacked, that's the technical term, get schwacked by a piece of junk, and that's game over, and then you lose that capability. So I think more and more people just need to be aware that, oh, well, that space